Are you a landlord or a property manager who wants to have total control over your property's financial records? Well, QuickBooks Desktop is the absolute best software that you can use for this situation, and I'm going to prove it to you in this free training tutorial right here, right now. Any version of QuickBooks Desktop, even an older version, even Enterprise Solutions, any version of QuickBooks Desktop is better for property financial management than any industry-specific software that you can buy. The only challenge is knowing how to use it. That's exactly what this tutorial is all about. Once you know the simple techniques that specifically apply to landlords and property managers, using QuickBooks Desktop to manage your property records will be easy and fun. Yes, that's right, it's easy and it can also be fun. So just tune in to this video and watch a little bit each day and follow along with me step by step. That way, you will start as an absolute beginner who knows nothing about QuickBooks or accounting, and by the time we finish, you will be an expert in QuickBooks Desktop, specifically in the area of managing properties. So just tune in to this free QuickBooks training tutorial a little bit each day and follow along with us step by step from the beginning of the course till the very end. And by the time you finish, you really will be an expert in QuickBooks Desktop, specifically in the area of managing property records. We're going to start out by identifying exactly what does a landlord or property manager need when managing financial records for a set of rental properties. Then we'll discuss some housekeeping issues about how we might be able to get you the software for free so that you can follow along with us step by step for better learning. So let's start out by identifying exactly what type of records a property manager or a landlord would need to keep. Once we know what they are, then I'll show you how to do it in QuickBooks Online. Well, first of all, we all know that your tenants data needs to be managed. But if you're managing your tenant data properly, you should actually have two separate sets of records for your tenant transactions. One set of tenant transactions that deal specifically with the rent that they owe and the payments that they made towards the rent. Now that area of data should be separate from the area of data that manages any transaction related to the tenant's security deposit. This way, if there's any dispute about just the deposit or just the rent that was paid, you will see all the transactions listed separately in separate tenant reports. You will see how great this is for both you and the tenant, because this way, at any moment, especially when they're ready to move out, you can present to them just a rent report with all of the invoices that you billed them for the time that they stayed, compared and listed with all of the payments they made, so that there's no excuse and no arguing about what they did and did not pay and how long they did or did not stay. You can also give them a separate report that shows only transactions that relate to the deposit. This way, if they gave you money at the beginning, you can show the justification for each deduction that you remove from their deposit for every incident of damage that they caused, so that you can show them why they're getting back the reduced amount, and they can see a report with every incident that reduced their security deposit. You will also need to know for and loss by building, or even a conglomerate of units together. You see, this is the only way to know if you have problem tenants that are costing you more money in repairs than other tenants. And if you were able to break down your income and expenses by individual rental unit, that information will give you tremendous insights into any potential problems you might have with physical units or any tenants. In fact, the QuickBooks Desktop reports are so great that you can start with a report that shows all your income and expenses by individual unit, and you can even condense the report to get profit and loss by building or any other summary that you would like to have profit and loss by. This tool is fantastic. And keep in mind, all of these areas of data must tie in to the main area of data, your company's general ledger. And when we use the computer, the general ledger is called the chart of accounts. That's where the main financial records are for any type of company, and that's where the numbers come from to give you your overall company profit and loss, as well as your company's balance sheet and all the other normal financial statements that any company would have, whether you're a landlord or any other type of business. And within the context of all that data management, there are still transactions that only landlords and property managers have to deal with. Things like writing off uncollectible rent balances for tenants who stayed for many months and never paid. What about the opposite of that? A tenant disappears and moves out, and you have a gain from keeping their security deposit. In fact, not only will we show you how to record those special transactions, but we're going to show you how to use the estimate feature where you can track the progress of leases from the tenants who signed a lease. And there's even a little section to record flipping property when you purchase property with or without a mortgage, pay for upgrades and renovations, and then sell the property as a gain. So every possible landlord or property rental manager situation that needs to be recorded in QuickBooks Desktop will be explained here very clearly and very easily. So please stay with us and be patient during a quick, simple setup. This way you will know how to create a file specifically to be used as a landlord or property manager and follow the setup steps as we put in the basic data in the new file. Once we're done with this very simple part of the course, you will see that every lesson that shows every landlord transaction will be clear, make sense, and you will have a pleasant experience learning everything you need to learn to use QuickBooks Desktop as a landlord or property manager.
Chapter 3: Creating a Landlord's Company File.
Now, before we begin creating your landlord's file to use step by step for this course, let me take a moment to discuss the fanciness of the videos and the video quality. You see, QuickBooks Desktop has not really changed in any fundamental way in the past 12 to 15 years, which means there really was no reason for me to update the videos because the knowledge is exactly the same. Thousands of landlords and property managers have used the videos that you're about to see to perfectly manage their property records with exactly the knowledge you're about to get. So I hope you will be patient regarding the quality of the audio and the video. I hope you will be patient about the fact that there are no super fancy animations or green screen effects in most of the videos, but I promise you, they are still the clearest possible explanation and clearest demonstration that you can have for every idea that you need. So please patiently follow along with these videos that have worked for well over a decade to help managers and landlords.
Chapter 3. Creating a Landlord's Company File.
If you set up a file for your properties, QuickBooks assumes that all of the properties are in one company. For example, if you own 3 buildings and you make them an LLC, it means all 3 buildings have income that come into that company, and all the expenses for any of the buildings are expenses of that one company. That structure is what we're assuming here when you do the file setup. Creating a file in QuickBooks is somewhat similar to creating a file in most other software. In most other software, when you save the file, you choose the name and you choose the location of the file. However, with QuickBooks, the latest version of QuickBooks, or at least QuickBooks Windows, does not let you choose the location. After you create the file, you have to search around the computer using the search bar to find the location of the file. It's not as convenient as it can be, but that's the way it is. After we do that, we will skip inputting the company information and tax information because that's part of setting up the file, and we'll skip it for now, and then at the end of the video, I'll come back and I'll show you how you can change the company name and address in the file, and you can change the tax type. So let's take a look at how we're going to do this. Just like, well, let me just fit this into our little show. And just like with any other software, when you create a new file, you can go to the top left and click File, New, and that would be the same thing as clicking this button here, Create New Company. If you happen to be in a screen with no company open, you can click either. But if you're in a screen where the company is already open, no problem. You will still have a file menu on the left, and you can click New Company. Now, we get the Express Start over here. We get the Express Start window. Just click Express Start. Now, for company name and address, it's very simple. We're only going to put the name for now. Holden, well, you can make it in caps because I like to distinguish between what we put and what QuickBooks put. So we'll put in caps, Holden, which is the guy's name, the landlord. And this is the owner of the property. Now, for industry type, click Help Me Choose, scroll all the way down, and then click Other None. Then click OK. This is because we don't want QuickBooks to put a sample chart of accounts for us. We want to put the accounts ourselves. And the way to do that is to choose Other None. For business type, we'll put that in later. For now, click Help Me Choose, and we'll click Other None. And we'll come back later and tell QuickBooks what business type we are, and click OK. In a real situation, we would fill in the address and the zip and the state and so forth, but as I said, I'm going to show you how to edit these momentarily. So when you're done with that, when you're done with the screen, all you have to do is click Create Company, and physically QuickBooks will be creating a brand new blank company file for you to put in all your company information and manage your business. Now, this window that pops up, you can either click Start Working or you can click the X in the top right. And here we are. Now, as soon as you create any file in any version of the QuickBooks Windows desktop, you have a whole bunch of windows that open up. You just click Close, you get a lot of help, click Close, you get a lot of messages and nonsense and this and that. But don't worry about the information we skipped over when we created the file. You can change the company name and address as well as the tax type by opening the My Company window. So let's take a look. From the main menu, click Company, My Company. This is the place where you would change the information we just put in. Now, there's a pencil on the top right that allows you to edit not only the name, but other things like the legal name as well as the tax type. So we click the pencil tool, And you can see that I have already off camera typed in the address, but you can click here and you could type in the address or whatever else it was that you skipped, 1737 Meadow Lane, Hauppauge, New York, whatever it is you want to put. So that's the contact information, and whatever you type into this field here will be the address that shows up on all the forms and the reports when you print company forms and company reports in QuickBooks. You can change the legal information, the company ID. Normally they would have a company employer identification number and so forth, or if you were a sole proprietor, you would use your social, and that's where you would put in and change that information there. Now, most importantly, you can click report information. When you click report information, you're telling QuickBooks which tax form, which means you're telling QuickBooks what company type your company is. And of course, you can put other none if you don't have a company. If you're just a person who owns a house and rents 3 or 4 units in your house, you can put other none. But if you set up the ownership of your properties as a company, probably one of these forms is appropriate. So just click OK and then just click No, and now you know how to change the information we skipped over when we created the file. Now, in the recent versions of QuickBooks for Windows, they do not tell you where the file is physically located. The only way to find out where the file is after you created it is to press F2 when QuickBooks is in front of you and QuickBooks is the active window. You will get the location of the file as well as other information about the file. So, if I'm in QuickBooks and I go to my keyboard and I push F2, I get this window popping up, the product information window. It has a lot of information about the software that's installed on the computer, as well as the file you just created. You'll notice the license number and product number up here are blurred out or blocked out for illustration purposes, but normally it would say the license number and the product number of the software you bought. You could see a lot of other information about the file, but the most important information is here, the location or the path. Now, we don't know where this is. Turns out that it looks like QuickBooks did put this on the desktop. So I know that the new file I created called Holden the Landlord is now on the desktop. But if I didn't know where it was, I could highlight this entire row after location, right-click and click Copy. Then I could go to the bottom where the folder is for Windows Explorer, click into the folder bar and paste, and QuickBooks would show me. You have to chop off the name of the file and just get the last name of the folder. So if I come here and I hit Enter, now I'm seeing everything in the folder that the file is in. And if I scroll a bit, if I bring it over here and scroll a bit, you can see that Holden the Landlord, the file is in fact in this path that I copied from the QuickBooks when I pushed F2 and got the product information.
Chapter 4. Setting the Landlord File's Preferences.
What are preferences? Well, they're the defaults, the settings, the options. Basically, it's the automatic behavior of the file until you specifically change it. Some preferences are for convenience, but some preferences are necessary to activate the features of the software that landlords need. The first preferences we'll change are the ones just for convenience. For example, QuickBooks gives us a warning message if we record a transaction with a date far in the future or far in the past. It's trying to help us out with the warning, but we don't want the warning. We know what we're doing when we put different dates. So that will be the first preference that we change. To open the Preferences window, we click Edit, Preferences. Notice on the left are the different categories of preferences. Notice you can scroll up and down to make sure you can see all the categories. Notice when you click on a category, the panel on the right changes, and each category has both a company preference and a My Preference tab. First, we'll click the top category, Accounting. Then click Company Preference. Now, we want to remove these check marks by clicking on them so that QuickBooks will not warn us if the transaction is more than 90 days in the past or more than 30 days in the future. Click OK, and you have saved the preference. Now let's tell QuickBooks that we don't want it to remember the open windows inside QuickBooks by changing the desktop view preference. From the main menu, click Edit, Preferences, then click Desktop View. Now, we don't want to save the open windows inside QuickBooks. It'll take too long to boot up, so we click Don't Save. Now, click OK to save the preference. You could jump to another category and then click Yes to save the preference, and then you would be in the other category. The next preference will change is in the General section. We want to shut off all the pop-up ads that happen as we use QuickBooks. So it just so happens we're already in the General section, so just click the check mark here, turn off pop-up messages for products and services. What else will we change? Reports and graphs. We want the reports and graphs to refresh automatically. So we click Reports and Graphs, click Yes to save the other category of preference, and then click Refresh Automatically. That means if a report is open when we record a transaction, that report will automatically be updated. Now, the first preference that we really need to change as a landlord is to make sure we can record tenants' deposits as directly deposited to our bank account. In order to do that, we have to click the Payments section, click Yes to save the other category of preference. In the Payments category, we click Company Preference and remove this check mark. This check mark is here to tell us that when we receive money, it goes first into this undeposited funds account before it goes to the bank. But in our case, we get many payments from tenants that are directly deposited to our bank account. So by removing this check mark, QuickBooks will enable us to do that. And the last required preference we will change are the billable expenses to tenants. You see, automatically, or you could say by default, it's the category way at the bottom, scroll all the way down, Time and Expenses, mark all expenses as billable. Remove that check mark. Sometimes we will bill the tenant, but we don't want the check mark coming up for every expense we pay, so we click to remove it and click OK. Congratulations! You've changed all the preferences you need to set up your company to be able to finish the rest of the course. Having set these preferences, the rest of the course will go more quickly and smoothly.
Chapter 5. Preparing a Landlord's Icon Bar.
The icon bar is simply a set of shortcuts to the same windows that you can open from the main menu. In this video, we will learn how to delete the icons that QuickBooks put, add icons that we will use most of the time, and of course we can edit the icon bar so that it will suit our needs. First, we will remove the icons that QuickBooks put. Now, in the recent versions of QuickBooks Windows for desktop, the icon bar is here on the left, and whichever window you click, it'll automatically open up as a shortcut instead of having to go all the way to the main menu. But I don't like the icon bar on the left. I don't feel it's as clear as it was in the older versions. So the first thing I'm going to do is click View and choose Top Icon Bar. Now all these shortcuts are across the top, and if we run out of room, we click here and we have all the extra icons because I squashed the window down a little. If you have different screen resolution and you can spread it out, you can open it up a bit. Now, the Customize Icon Bar window is the window that allows you to remove, edit, and customize the icon bar. You open it up from the main menu.
you click View, then go down to Customize Icon Bar. Now you're in the Customize Icon Bar window. And if you look at this panel on the top left, you see that each of the items here correspond to each of the items in the icon bar because that's what they represent. Click on the top one and click Delete. Notice it disappeared. Notice Client Review is next, and when I click Delete, that one disappears. Notice the icon bars shift left. So Home is to the left of Statement Writer. If I delete the Statement Writer, now Home is the one all the way to the left, and so on. If you keep clicking Delete, they will all eventually go away. Be careful. You must click OK, because if you click Cancel, they come back. It won't save what you changed. View, Customize Icon Bar, Delete, Delete, Delete. Make sure you click OK, and then you have successfully removed all the icons that we don't need. And now we'll put up in the icon bar the transaction windows that we usually use. For example, we usually receive payment from the tenant. So we're going to click from the main menu, Customers, Receive Payment. And this is the window we open up when we get paid from the customer, or the tenant in this case. Since we're going to be using this all the time, we should make this first in the icon bar. The way to put up the active window in the icon bar is, at the moment the window is active, go to the top left and click View. You will see the name of the window will be down here, Add Receive Payments to the icon bar. Click on it and then click OK, and you notice our first icon. We click Payment and the Receive Payment window opens up. Same thing with an invoice. If we want to acknowledge that we've earned the rent and or give a document to the client to pay for the coming month, we set up an invoice. From the main menu, we click Customer, Create Invoice. At the moment the invoice window is the active window, we go to the top left and we click View, Add Create Invoice to the icon bar and click OK. Now we have a shortcut to open Invoice. And now that we have a shortcut to the two most common transactions that landlords need, we're now going to put up customized reports. These are reports that landlords need and help us find things we are looking for in QuickBooks. There will be a future video discussing report customization, and in that future video, we'll go more deeply with more customization features and options, and of course it will be presented clearly from beginning to end. All we're going to do now is slightly adjust the reports to help set up the file. The first report we're going to put up is called the trial balance. It shows the accumulated totals of each account in the chart of accounts. From the main menu, we click Reports, go down to Accountant and Taxes, go directly across, and go down to Trial Balance. Click on Trial Balance and the Trial Balance report opens. Of course, it shows numbers being 0 because we haven't recorded any transactions yet. But the most important thing to notice is the date range that the trial balance opened to by default is January 1 of 2019 to January 31 of 2019. That's because the computer thinks that January of 2019 is last month. And the computer thinks that because today I am filming this video on February 3rd, 2019. Therefore, last month, from the point of view of the computer, is January of 2019, and that's how it opens, from the main menu. However, it is more helpful to our course if you click on the date range, scroll up, and tell QuickBooks we want to see the results of all transactions regardless of date. We can make the window a little taller by clicking and dragging the border, and we will use this trial balance report to help find and fix mistakes. We will use this trial balance report to see the results after each of the transactions that we record in all of the future videos. So let's save it to the icon bar. From the main menu, click View, add trial balance to the icon bar, and click OK. And now you can see if you close the window, oh wait, if you try to close the window, it's going to ask you, do you want to memorize the report? We want to click Do Not Display This, and we want to click No, because we just memorized it in a better way than QuickBooks is suggesting to us right now. Click No. Click Open here, and not only does it open, but it remembers we like the pull-down range to be all. If we go all the way back to the main menu and reopen it fresh the way we originally did, you can see that it will open, the one we opened from the main menu will open by default with last month. So that's an example of modifying a report, and then after you modify it, the next report that we will save in the icon bar is called the journal. It's one of the most important reports in QuickBooks. It's the only report that will show every single transaction ever recorded into the file since you created the file. It's also the only report that can show you transactions in the order in which they were entered into the computer, because all the other reports in QuickBooks show you the transactions in date order. So we really do need this report. From the main menu, click Reports, Accountant and Taxes, Journal. Notice the computer still thinks it's February of 2019, so by default it opens this month to date. Click the top left pull down and choose All. We're telling the computer that we want to see the results of all transactions regardless of date. This will help us use the journal in the future to find and fix mistakes. Now, we want to customize the journal a little bit more. If you want to customize the journal more than just the date, you have to move the mouse to the top left where it says Customize Report. Notice in the Modify Report window, there are 4 different tabs with 4 different ways to customize any QuickBooks report. Click the Display tab in the top left, and notice there's a panel in the bottom left of this tab that shows you all the columns that you are able to put on a report. Let's remove the ones we don't want. Click here where the check mark says Adjustment to remove the adjustment column, then scroll down until you see Debit and Credit. Click to remove the check marks from Debit and Credit and replace them with a check mark next to the word Amount. When you click OK, you can see that the debit and credit columns are gone and all you have is amount here, and the adjustment column has also. And the last change we will make is to add a column that shows the date and time that each transaction was actually entered into QuickBooks. You see, this column here, Date, is actually the date of the transaction. It's not the date and time that the transaction was entered into QuickBooks. If we add that column, then it will be much easier to use this report to find and fix problems and mistakes. Again, from the top left, we click Customize Report, and the fourth choice down is Entered Last Modified. Click to place the check mark in the margin, then click OK, and now you can see Entered Last Modified has been added to the journal. Now that the journal looks the way we need it to look, let's add it to the icon bar. From the top left, click View, add Journal to the icon bar, then click OK, and now the journal will look the way we need it to look if we open it from the icon bar. Now let's just add a separator between the section of Transactions and the section of Reports. From the main menu, click View, Customize Icon Bar, and click right above where you would like the separator to appear, and then click Add Separator. If you do it twice, you see there are 2 little lines separating the Transactions section of your icon bar from the Reports. To keep the changes, click OK, and now you learned how to manage your icon bar.
Chapter 6. Setting up a landlord's chart of accounts.
What is the chart of accounts? Well, in the days before the computer, the chart of accounts was called the general ledger. It was simply a notebook where each page in the book was a separate record of a different thing that the company had to account for. For example, page 1 was video income. That means every time they performed that particular service, they would write it down on page 1. Page 6 was repair expense. That means every time they paid for that particular expense, they would write it down on page 6. This way, they could get the total of page 1 and know the total video income they earned, and they could get the total of page 6 and know the total repair expense they had. Each page was called an account because it would account for the records of that item. Nowadays, we don't call it the general ledger. It's the same idea, but physically it's in the computer, so we call it the chart of accounts. So, an account is an individual record of transactions. You need an account for each bank account, credit card account, income source, and expense that your company has. You will need other accounts as well, but we'll address them in the course as they come up. The chart of accounts allows you to delete, edit, and add all the accounts in the chart of accounts window, and I'm going to show you each of these actions one by one. So first, we'll talk about deleting an account. Now, in order to open the chart of accounts window, we go to the main menu and click List, and the very top list is the chart of accounts. If we make the window a little wider, you notice that QuickBooks already put some accounts in the chart of accounts for us. Now, mind you, your chart of accounts might not look the same. If you did not click Other None when you set up the file, you might have a full chart of accounts because you accidentally chose a sample chart of accounts instead of clicking Other None. If you clicked Other None, you might have very few like we have here, but they might be slightly different. Just keep in mind that I'm only going to delete this one or show an example of how to delete this very top one. So if you have accounts receivable and you want to follow along step by step, we'll only delete this one. But I can tell you all these others we're going to use, some of which I'm going to demonstrate with now. So just to show you how to delete an account, I'm going to click the top one where it says Accounts Receivable. Then at the moment that particular account is selected, I go to the bottom left and click Account, Delete Account. Then I click OK, and that account is gone forever. Okay, now, what about making an account inactive? What does that mean? Well, sometimes we can't physically delete an account. For example, if you already recorded a transaction in a particular account and you did not delete that transaction and that account still has transactions recorded in it, QuickBooks will not let you delete that account. It will also not let you delete these two payroll-related accounts that QuickBooks automatically puts, even though we're not using QuickBooks for payroll. So for something like this, if I click Payroll Liabilities and I click Account, Delete, it doesn't let me because it's connected to something related to payroll. Same thing with this, Payroll Expenses. Click on it, Account, Delete, it won't let you do it. So the only way to remove accounts from your list in order to not let your account list get cluttered up is to make them inactive. Click on the account you wish to make inactive, go to the bottom left and click Make Account Inactive. Now it looked like it disappeared, but it really didn't. Let's try it again with the payroll expense. Click on it, Account, Make Account Inactive. Now it seems like it's gone forever, but we simply removed it so it didn't clutter up the list. Well, what if we want to see the accounts are inactive or even bring them back? No problem. We can click this little button here to say Include Inactive Accounts, and notice when I click the check mark here, the other two show up, but they have an X next to them. That indicates that they are still inactive. We could always right-click or click in the bottom left and click Make Account Active, and the X goes away. This way, when we remove the check mark, you can see they're still there when we're not including inactive accounts. So it's the same thing with this one as well, but I'm going to keep this inactive because I don't want payroll accounts cluttering up our list, and then I will remove the check mark here. And finally, we're going to add accounts to the chart of accounts. Now, this is the sample chart of accounts that we will use for this course. Most of them are in capital letters. I suggest you put them in with capital letters. This way, your eyes can clearly distinguish between the accounts that we put ourselves and the accounts that QuickBooks put automatically. Notice it has both account name and account type for each of the accounts that we're going to put. Now, account name can be anything you want as long as you know what that means. You can spell it any way you want, but keep in mind, whatever you type in for account name is exactly the way it will show up on any of the QuickBooks reports. But regarding account type, you have to be very careful that you choose the correct type. Now, please note, account type in QuickBooks is not the same thing as account type when studying accounting theory. Account type in QuickBooks simply determines how it behaves in the software as we use it. Please view the supplemental video called Defending the Method, which means I will explain why the account types are the types that I have chosen in order to get the file to work properly, specifically for a property manager or a landlord. So please watch that supplemental video, and in the meantime, please cooperate along with what we request that you do when we ask you to put the specific account types for the specific names. So here we are again with the names and the types, and we're going to put these on the list one by one. Again, we could reopen the chart of accounts from the main menu, List, Chart of Accounts, and again, the bottom left button of every list window controls the list. So we click Account New. Now the first account is a bank type of account, then we click Continue, and then with the cap locks on, we type in cash in bank. Cash in bank. Okay? Notice, by the way, if we click the pull down here, we get every possible account type. So that previous window we saw a second ago before we came here, that's only for the first one if you're putting on a list. If we click Save and New, notice the account shows up here as the name that we typed as well as the type. And then the window is waiting for us to put in the next one. If you accidentally close the window and you reopen it, Account New, you would then have to choose the type over here again before getting to the other window. I guess the next one is Unearned Rental Income, and the type is Accounts Receivable. So we can come down here and click Account Receivable. That's another way of designating the account type. And then click Continue, and then type it in here with capital letters, Accounts Receivable. I suggest you click Save and New because that will clear the screen and keep the window open so that you can type in the next one. But when you click Save and New, notice it got added to the list with the correct name and type. Let's do the next one. Holden's Investment, and that's an equity type of account. So we go down to where it says Equity and we type in Holden's Investment. Okay, Save and New. Go to the next one. Go to the next one. It's Holden's Withdrawals. Okay, and it's an equity type of account. Holden's Withdrawals. Save and New. What's the next one? I think you get the idea. Skip the ones that QuickBooks already put. They're the ones in lowercase. Income from late fees. Well, we need that because we have to track all the money we earn specifically from late fees. So we choose income type of account and we type in income from late fees. And then we click Save and New. Then we come here. type in rental income earned, which is a separate record of income that should be tracked separately, but it's also an income type of account. So we type in rental income earned. Save and new. This way, the top of our profit and loss will show us the income both from late fees and normal rent, and then our profit and loss will subtract out each of these expenses. So the first one is cleaning expense. So we change this to expense type, and we type in cleaning expense. Save and new. What's the next one? The next one is delivery expense. Save and new, and so on. I suggest that you pause the video and you finish putting in all the expenses after delivery expense. I'm going to pause the video and put. Congratulations! You've finished putting in the chart of accounts that we will use for the rest of the course.
Chapter 7. Items on a tenant's invoice.
What is an item? Well, an item is a service or product that one sells to a customer, in this case, our tenants. An item is something that you would list in the body of a sales receipt or an invoice when you make that sale. Each item is connected to an income type of account in the chart of accounts. Every time an item is placed on an invoice, the income account for that item goes up. For example, Holden wants to list late fees on a tenant's invoice separately so that the tenant can see how much she or he is being charged specifically for late fees compared to the rest of the regular rent. He also wants to track the income from late fees separately so he can know the total he earned just from late fees. He wants to be able to compare that to how much he earned from the overall rent. He must create an item on the items list called late fees. And when he creates this item, he must connect it to the income account in the chart of accounts called income from late fees. So if you look at the diagram, on the right is the pretend invoice that we would imagine giving the customer, the tenant, to ask them to pay for the rent. Now, when we list the monthly rent, $500, that means when we record this particular invoice, this account in the chart of accounts should go up by $500 because that's where it gets recorded. However, if we add a late fee for $1.50, that means that $1.50 should instead be recorded in this account, income from late fees. This way he can get the separate totals of each account and know how much he earned from rent compared to how much he earned from late fees. So let's take a look how to put it into QuickBooks. From the main menu, click List, Items List. Now, as I mentioned before when we were talking about the chart of accounts, the bottom left button of every list window controls the list. Click in the bottom left where it says Item and then click New, and the new item window opens up. Now, almost everything a landlord would ever do for a tenant is a service. So we click Service, then the item name will be Rent Due, because that's how it appears on the invoice. And the account or the income account that we will connect it to will be, it has to be an income type of account, rental income earned. So if you see this item for a certain amount on the invoice, the money amount on that same row will get recorded into this account. Now we're going to click Next, and then we're going to type in late fees. And that particular item is going to be recorded into income from late fees if we ever have to put a late fee on an invoice. Click OK, and congratulations, you've finished setting up your items list. You can change the column width by moving the mouse pointer up to the top here till it becomes the double arrow, and then you can click and drag. You can even see, here's the name of the item as it will appear on the invoice or sale receipt, and here's the name of the account that it will go into as part of, by the way, these accounts are only the accounts in your chart of accounts that we had set up before. It's going to be one of these two, but it will show which item goes into which account.
Chapter 8. Entering tenant data.
There are two places in QuickBooks that allow you to manage your tenant's information: the Customer Center window and the customer, or in our case, tenant specific reports. We're going to explore both of these very thoroughly in this particular video. First, the Customer Center. It allows you to add, edit, delete, or make inactive any tenant or tenant's records. It's like a Rolodex or a database of tenants that allows you to access any information about your tenants with just a few clicks. You can see all the transactions you ever had with a particular tenant. You can take notes and update the notes about your tenants right inside their own records. So, let's take a look. Let's just open it up and see what it looks like. From the main menu, click Customers, Customer Center. Now, of course, in a couple of minutes, we're going to put the tenants list right here. And after we put in the tenants, their names will appear here, and we'll put in their information like their phone number, their email, and any other information we need will be right here. The proper way to set up tenants' records would be in a hierarchy like a pyramid. For example, if you had one company that owned two buildings, one of the buildings was on Peyton Place, and that building had 4 units, and the other building was on Meadow Lane, and that building had 4 living units. That means that the company in the company file would have 8 records, 4 of which would be under each building. If you set it up the proper way, then your profit and loss by apartment or profit and loss by building will be correct. Remember, no matter how many buildings are in one company under one legal entity, it has to be one company per one company file. Then in that file, you can list the buildings in the customer center and then list the units and the tenants as sub-customers under that building. So let's take a look. Let's imagine this is the tenant list for Peyton Place and the tenant list for Meadow Lane, but both of those buildings are in our company. We're going to put in everyone on the tenant list just to see how it gets input, but in our course, we're only going to use Meadow Lane just to save time. So let's take a look how to put in this information. Here we are in the customer center, okay? On the top left, you see New Customer, click New Customer, then first you have to click New Customer and put in the building. We're going to put in first Meadow Lane. Now we're going to click OK. If we double click, we can edit any of the permanent information. QuickBooks thinks this is a particular customer. So if there were an email address or a phone number associated with the building itself or any other important data that you feel you could put in and benefit from in the Meadow Lane building record, you could put it here. Let's do the same thing for Peyton Place. New Customer, Peyton Place. So all I did was put the name of the buildings. Now what we're going to do is put the tenants under each building. For example, under Meadow Lane, we're going to put in apartment 1A is Alan Arby, 2B is Betty Boop, and so on. This is how you do it. Well, we could make this column a little wider if we need to. So click on the building, then when that building is selected, click New Customer Job, and over here click Add Job. Remember, you have to click Add Job when Meadow Lane is selected. Now it says New Job, and it knows it's under Meadow Lane. And we type in apartment 1A, Alan Arby. Just follow along step by step. Now, of course, you might want to put a dash between the 1A and the Alan Arby. And, of course, you could fill in other information about his work number and his website, or additional information about, you might want to categorize certain types of customers and other kinds of things that you could explore and experiment with if you edit his information and need to pull it up at any given moment. Click OK, and notice there's an indent here. This indent tells you that Alan Arby is under Meadow Lane. Make sure Meadow Lane is selected and click New, Add Job. Now we type in apartment 2B-Betty Boop. And of course we could put in any other additional information that we could double click and open and edit at any time. Click OK. Notice Betty Boop is under Meadow Lane. Again, make sure Meadow Lane. Be careful not to leave the cursor on Betty Boop or you're going to make a sub-customer of Betty Boop. Make sure you again select Meadow Lane, click New Customer, Add Job, and then this is apartment 3C, Candy Charles. Okay, then click OK. Same thing, Meadow Lane, New Customer, Add Job, 4D, Dave Deaney. Okay, very good. Click OK. Now, notice if I click 1A Alan Arby, his name comes up here, and it says what job he's under. And if I clicked here after I recorded his transactions, I would see all of his transactions listed here and so on. See if you can do the rest with Pay and Place while I pause the video. See if when you come back to the video, your Pay and Place list looks the same as mine. So, if your final list looks like this, with these folks indented after Pay and Place, then you did the setup correctly for the other tenants. If not, you have to learn what you used when managing the chart of accounts regarding deleting and making list items inactive in order to get it to work right. Don't forget, if I double click and I see that I'm under the wrong job, I can switch jobs if I need to. In this case I don't, but that might help you correct things so that we can move on to the next part of the video. And here we are in the next part of the video. We're going to explore features of the Customer Center. First, you should know that if you open the Customer Center, you can see every transaction you ever had with that tenant. So, just to remind you how to open it, you click Customer, Customer Center. If you want, you can even add it to the icon bar. Let's do that. View, Add Customer Center to the icon bar and click OK. Now we won't have to remember where to click in the main menu to open it up. Now, notice if I click 2B and I get Betty Boop, what would show up here under, by the way, there's the Customer Job tab and the Transactions tab in the left margin. So I prefer to see my customer transactions organized by customer, not by transaction type. If you want to see your transactions organized by transaction type, of course you would click there, but I'm not going to. We click Customer Job here, and you can see them listed here as long as you choose this tab. If this tab is chosen, you could see all transactions. You can sort them by type, or you could even sort them by date, or even choose a different date range, and that's how you can see all of the customer or tenant transactions. You can actually sort them, as I mentioned, and you can record notes. If you have issues or problems with a tenant, what you can do is select that tenant, then click Notes, and then you can click Manage Note, Add New, and type in anything you want to remember about this tenant, and that note will be there. You can even date and time stamp the note so that you can remember the date and time that you put that note in. Then click OK, and then it means when you come back to that particular tenant, you'll automatically see notes as soon as you click here, and you'll see each note that you left listed here, and when you click on it, you can see the note and you can edit it or delete it or do whatever you want. So don't forget to add to the list of handy things that the Customer Center can do the fact that you can date and timestamp the notes that you make for the customer. Now the Customer Center is nice, but there is no substitute for the customer, or more specifically, the tenant reports. The most important report is the customer balance detail. Now, we don't want to call it the customer balance detail. We want to call it the tenant balance detail. But what it will show us is not only every transaction we've ever had with that particular tenant, or at least transactions that change the balance, but it also shows the running balance, which means the balance that the customer or tenant owed us, or the balance that we owed the tenant at any particular moment in time. So we have to open it up, pin it to the icon bar, and we'd like to change the name from the customer balance detail to the tenant balance detail. So from the main menu, we click Customers, we click Reports, Customers and Receivables, Customer Balance Detail. Now, of course, it's blank now because we haven't had any transactions. But we need to do two things. We need to expand our knowledge of modifying reports a little bit to make this read Tenant Balance Detail. So we learned in a previous video that if we wish to customize a report, we go to the top left and we click Customize Report. Then, in this case, we're going to customize the header footer, and we're simply going to change the word customer in the title of the report to the word tenant. Now it says tenant balance detail. If you want, you could even remove date prepared, time prepared, and any of this other nonsense, and then just click OK. And now the title of the report looks the way we need it to look. We can also expand upon the knowledge that we learned about our icon bar by putting it up in the icon bar, but also having the label read Tenant Balance Detail. So, from the main menu, we click View, to come down to Add Customer Balance Detail to the icon bar, but remember, in the label, we can change the word customer to the word tenant. Oops, by not doing it that way, you have to do it this way. You go tenant. Just like that. And now the label will say tenant balance detail. So if we want to see the tenant balance detail, we click here and it remembers the title that we like. So now we have successfully changed our customer balance detail into tenant balance detail. And we're going to do the same thing with the second most important tenant report, the profit and loss by job. Let's make it change to the profit and loss by tenant. Very simple. From the main menu, click Reports, Jobs, Time and Mileage, and then Profit and Loss by Job. Now, don't forget to make the date pull down show the results of all transactions, regardless of date. Now we'll change the title in the report. Click Customize Report, click the Header and Footer tab, and change the word Job to the word Tenant. Don't forget to remove the date prepared, the time prepared, and report basis and anything else in the Header Footer tab that you want to get rid of. Now when I click OK, it has the right title and it's nice and neat. Now all we have to do is add it to the icon bar. From the main menu, click View, add Profit and Loss by Job to the icon bar, but in the label, we'll change the word Job to the word Tenant. So we're changing the label in the icon bar. Now we have Profit and Loss by Tenant. Just one more thing. I don't like that this says Customers. I want to change it to have it say Tenant. So I'm going to click View, Customize Icon Bar, click on the word Customer, click the word Edit, and change the word Customer to Tenants Records. And that improves your skill in QuickBooks about the icon bar, and it clarifies what we're about to do going forward. Excellent work. Be very patient. There's only one more setup video after this, I promise, and then we will start to make landlord-related transactions.
Chapter 9. Creating Rent Receipts.
Transaction documents in QuickBooks include things like estimates, invoices, sales receipts, but the credit memo document is the one that we need to use to give a rent receipt. So we will change a credit memo into a rent receipt. This is because a credit memo changes a tenant's or customer records in the way that a rent receipt would for a regular tenant. It has the same effect regarding the type of transaction it is. You can explore other possible changes from the windows we open, but we're only going to change the title from from credit memo to rent receipt. Even though there are many things you can edit, you could add or remove columns in a particular template for the document, you could change the position of the fields, you can add or remove fields, and you can even put a company logo. But again, the only thing we're going to do to customize our credit memo is change the title to rent receipt. So let's open up a credit memo and take a look. From the main menu, we click Customers, Create Credit Memo or Refund. And here it is. Now, in the title bar of the window, it says Create Credit Memo Refund. But you can see, when you look at the details of the credit memo, of all the different fields that are on the screen, there's one that says Template. And QuickBooks comes with 2 different credit memo templates. Observe the fields and the column headings that are in the one that says Credit Memo. But if I choose this template, notice the title changes to Return Receipt, and notice some of the fields change here. So QuickBooks already created 2 templates, and even though this one says Return Receipt and might have a different look to it, it's still a credit memo. It still has an effect on the tenant's balance and the same effect in the general ledger chart of accounts when you record it. Now, there are 3 steps to making a new template. You have to copy an existing template, you have to change the name, and then save it on the template list. After that, you can do whatever you want with it and make it look the way you need it to look. So again, let's copy an existing template and then change the name, then it's on the template list, and then we can do what we want. So how do we do that? Well, in the Formatting tab of the ribbon, right under the word Formatting, you can click Manage Templates. And now you get the Manage Templates window. And again, there are 2 that already exist. Now, in order to make one for yourself, you have to copy an existing one. So the best thing to do is to choose one that looks the most closest to the way that you want yours to be and copy that one. Then you can customize it. So we'll click on the one that says Custom Credit Memo. Then while that's selected, we click Copy. Notice it created another one, and the name is already put here as a copy of the first one. Let's change the name to Rent Receipt. Now, after we change the name, we click OK, and we can see that not only has it been saved as a different name, or an additional template, but you see you get a window here that allows you to choose how you want to edit or how you want to customize your credit memo. And this window is called Basic Customization, and you can explore and experiment with this on your own time. However, the thing that we want to change, basically the only thing we want to change, is the title, Credit Memo. We want to change it to the word Rent Receipt. So we have to click down here where it says Additional Customization. And when we get to Additional Customization, this is the place where you can choose which columns, what to put in the footer, what to put in the header, and so on. And again, you can explore and experiment with some of these options to get the look and feel that you want. The only thing we're going to change is where it says Credit Memo, we're going to put Rent Receipt. You see, this way, it'll say Rent Receipt when we print it out and give it to a tenant. Now, when we click OK, we're getting a warning message that there's another additional way that we can customize forms down here in this button called the Layout Designer. And again, I encourage you to explore and experiment with it on your own time. It is self-explanatory and intuitive if you feel you need to customize your form a little more. We're only going to click OK, and notice that this has been called rent receipt. This has been changed to rent receipt. So we click OK, and then click OK, and notice we now have 3 templates. One says return receipt, one says credit memo, and those are the ones that came with QuickBooks, and then the new one that we made is called rent receipt. So whenever the tenants pay us and we have to print something, instead of printing a regular credit memo, we'll print this one because it says rent receipt.
Chapter 10. Receiving rent payments.
When we receive rent payments, we usually receive them in advance of when the tenant stays for a particular period of time. Every transaction you ever record into QuickBooks always affects 2 separate areas of your records. First, every transaction that you record changes the general ledger in the chart of accounts, and the results of those transactions will show up on our good friend, the trial balance. But that very same rent payment, that very same transaction also changes tenant-specific records, and we check those on our good friend, the report we recently put up, the tenant balance detail. Now, what will happen on the trial balance when we receive our first rent payment as our first transaction? Well, we know that cash and bank will go up because we physically received money and put it right in the bank. And we also know that unearned rental income will go up because at the moment we receive the rent, we have more unearned. We always receive it before we earn it, or at least almost. So, please note, however, our examples have slightly different events in slightly different order than would be in a real situation. I promise you, you will experience every situation in order soon. However, please just follow along with our little story just for educational purposes. Learning it this way will make the ideas more clear. We will learn about security deposits and late-paying clients later in the course. For now, let's just imagine that the rent we receive, or let's say the payments we receive in this video, is for future rent and not for a security deposit. So, let's take a look at our first example. We charge Alan $2,000 a month for rent. So on January 1, he gave us $12,000 with a check, and that's for 6 months' rent in advance. His check was immediately deposited into the bank account, and we're always going to pretend that is the case every time we get a check from a tenant. That's just the way the course goes, and you could take a look at the banking and the undeposited fund features in the supplemental videos later. So what will happen in the trial balance when we record this? Well, it's blank now, but as soon as we record this payment from the tenant, cash and bank will show up for the first time as $12,000. Unearned rental income will show up for the first time as $12,000. And that's what will happen in the trial balance. But from that very same payment, the balance in Alan's specific records will become $12,000. If we receive a payment from a tenant, we click Payment. Now, the tenant is Alan Arby. He's under Meadow Lane. We received check number 6161 from him, and the date that we received it from him was January 1 of 2019. The amount was $12,000. Now, it's very important that you choose the correct bank account. In this case, you're going to choose cash and bank because we are imagining for our little story that all the money we collect gets immediately deposited into the bank account. If you hold the checks and deposit them on much later dates, you can watch the supplemental video about undeposited funds and held checks. But for now, let's just imagine the tenant paid directly into the bank account, or you put the check there immediately. Now that the information has been put in the window, we're finished. Click Save and Close. Aha! QuickBooks knows that if the tenant is a customer, they have a negative balance if they pay in advance. They have a credit balance. So in a real situation, we would print the credit memo, and we would make sure that the credit memo that we print would be the rent receipt template that we made in the previous video. But we're not going to do that now. You could always go back and reopen it, make sure it has the right template. Click OK, and the transaction is recorded. Now let's check our results. When we open the trial balance, it says unearned rental income shows up for the first time as $12,000, and cash in bank shows up for the first time as $12,000. And that's the records of the general ledger in the chart of accounts. However, the other area of records that changed from that very same transaction is right here, the tenant balance detail. See? We have a payment just only from Alan for $12,000, and if he were a normal customer, he would have a negative credit balance. Now, doing a second example will illustrate some very important points. Let's imagine we charge Candy $1,000 per month in rent, and on January 1, she gave us check number 7171 for $6,000, which is 6 months' rent in advance. We got two people whose parents really want them to stay away. So her check was immediately deposited into the bank, and again, that's going to be the same situation for the whole course. So again, if you want to do it with undeposited funds and hold on to the check for a while before you deposit, you have to watch the supplemental videos about undeposited funds. So what will happen in the trial balance? Well, before we deposit Candy's $6,000 check, these were the numbers after the most recent transaction. But after we record her check, cash and bank will increase to $18,000, and unearned rental income will also increase to $18,000. What else will happen? The balance in Candy's specific records will be $6,000 that we will owe Candy in future rent services until she finishes staying. So let's take a look at how to record that. Well, let's close out these reports. It would be the same way. We received a payment from a tenant, so we click Payment. Click the pull-down arrow and choose the tenant. In this case, it's Candy. She gave us check number 7171, and the amount was $6,000. Okay, now all we have to do again is make sure we're choosing the cash and bank, because we're not holding on to the check, we're depositing it immediately. And this is also helpful if the money really did go directly into the bank account on January 1, even if it was a transfer. So we click Save and Close. And again, QuickBooks knows if it's a customer with a negative balance, they have a credit balance. And if the tenant wanted a rent receipt, you would click Print and you would choose the proper template that we created in the previous video. But for now, let's just click OK. It's very rare that we have to give a rent receipt all the time. But let's take a look at the results. In the trial balance, the numbers are exactly what we predicted, $18,000 cash and $18,000 unearned rental income. And if you want to know why is unearned rental income $18,000, well, you can just click the tenant balance detail and you can see the total unearned rental income is $18,000 because we owe Alan $12,000 in future rent services as of January 1, and as of that same day, January 1, we also owe future rent services to Candy for $6,000. So the total in advanced rent that we have not yet earned is $18,000 from Tenants, and that equals the total in the trial balance, unearned rental income, $18,000. Now our closing point is a very good bit of news. If you made any mistake in this video or any future video, don't worry. You can fix any mistake by opening the transaction from the report. Just double-click, fix it, and save. Let me show you what I mean. If we open the tenant balance detail and we say, hey, we made a mistake, Candy didn't give us $6,000, she gave us $600,000. That's just an example. We can double-click right on the transaction as it's listed in the report. We can change it to anything we want. And now when we click Save and Close and then click Yes, you see we have this giant crazy number that we just changed. This affects that transaction on every report in every area, not just the tenant area. So if I reopen the trial balance now, you see this big fatso giant number. That's crazy. If you ever want to see the detail of any total that's showed on the trial balance, just double click. If I double click this cash and bank, I can see that the reason why the computer thinks we have 612,000 is because we got 12,000 first, and then the computer thinks we got 600,000 later on. But don't worry, we could change this again. Even from the trial balance, we could open up the very same transaction. Double-click the total to get the detail, then double-click the specific transaction in question, change it back to what it was supposed to be, and now when we click Save and Close and then click Yes, all is right with the world, and our numbers reverse themselves and go back to exactly what they were supposed to be in the first place. So never panic if you make a mistake.
Chapter 11. Billing Tenants Rent.
We make an invoice after we earn the rent. This is how earned income is recorded into QuickBooks. And that's because in a normal business, the invoice would be a request for payment after the product or service has been delivered. When we create an invoice in QuickBooks, it actually serves two functions. First, it records and acknowledges that we have actually earned the income. And the second function of the invoice would be to make a request for payment and actually have a document that we can print and hand to the tenant. So, first, we will record that we have earned only at the moment we have earned it, which is actually at the end of the month, and we'll discuss that in a moment. But then we will give a document to the tenant for a request for payment for a future month. Now, regarding giving a document to the tenant, we'll talk about that in the video that follows this one. The rest of this video is just making invoices to record that we acknowledge that we earned the rent. In fact, in many cases, we don't even make an invoice. We just record that we earned the rent, and it's very rare we have to print one and give it to a tenant. We did not earn the rent until the end of the month. The invoice date, therefore, must always be the last day of the month that the tenant stayed. Since most tenants pay before staying anyway, you can give them a paid invoice. And again, we will learn in a later video how to get QuickBooks to mark the invoice as acknowledged and stamped as paid. So what will actually happen at the end of the month at the moment we record this invoice? Well, at the end of the month, we can acknowledge and record that we earned rental income. So that number will go from 0 up, and it will increase. But the unearned amount, that actually the amount we earned during the month, will make unearned rental income decrease by the amount we actually earned. That's because if a month went by, then some of what the tenant paid for, we actually earned. So that's what will happen. Rental income will show up for the first time, and unearned rental income will go down when we make our first invoice. For example, on January 30th, or really supposed to be January 31st, we need to make an invoice for Alan to acknowledge the rent that we have earned during January. Remember, he is the only one that pays $2,000 per month. So what will happen in the trial balance when we record an invoice for Alan for the very first month that he actually stayed? Well, we know that here are the numbers after the previous video, after receiving the rent from only 2 tenants, Alan being one of them. Now, we know that Unearned rental income is going to decrease by the amount that he paid and become $16,000 because $2,000 of the previous $18,000 we just earned during January. But the rental income actually earned is an account in the chart of accounts that will show up for the first time in the trial balance as $2,000. And to top it off, in Alan's specific records, his balance then becomes $10,000. Let's take a look. From the icon bar, we click Invoice, and our good friend, the Invoice window, opens up. Now you can collapse this right panel here because we will not be using that in the course. But do not collapse the ribbon with this arrow. Leave the ribbon open because we will be using these very important features during the course. Now, the first thing we have to do is choose the correct tenant. In this case, it's Alan. And of course, we're going to put the date that we actually earned the first month's rent, which would not be until January 31st, 2019. Notice QuickBooks knows this is the first invoice in the file, and it automatically puts invoice number 1. Now, click directly under the words item code to bring the arrow. Click on the arrow, and we're not charging a late fee, obviously, because he paid in advance. We're charging him the normal rent. And of course, the amount for Alan is $2,000. Now, to save a number in a field, you can go to the left of your keyboard. On the left side, there's a tab button. Push tab. It will save the field and will not save the entire window so that you can take a look. That's it. You're done. Now, in the future, we'll talk about printing this document and giving it to a late-paying tenant as a request for payment. But for now, if we're just recording it to acknowledge that rent is earned, all we have to do is click Save and Close. Now, in the rest of this course, every time you see this message, Available Credits, you will click No. That is because in a future video, we will learn about applying payments to invoices, but we will not learn about that yet. So it is very important for now that you just cooperate and follow along and click No. Now when we open the trial balance, we can see the result is exactly as we predicted. Unearned rental income decreased by the amount that we earned during January and became $16,000, and the amount that we actually earned shows up here for the first time as rental income earned, $2,000. We should also take a look at the tenant's specific records. If we look at the tenant balance detail, you can see that Alan's balance has decreased by $2,000 in acknowledgement that we have earned January's rent and recorded it at the end of January, January 31st. So now we only owe him $10,000 worth of future rent services. Now let's do a second example. Let's imagine, again, on January 31, we made another invoice, this time for Candy, to acknowledge the rent that we have earned during January for Candy. Now remember, she only pays $1,000 a month. So, can we predict what will happen? Well, this is the way the trial balance looks before we record this next transaction. Can you predict what the numbers will be? If we have less unearned because another month went by, that means unearned goes down by the amount of rent for that month. So unearned rental income will become $15,000, and the rental income earned will increase this time and become $3,000. So we have $1,000 less of unearned and $1,000 more of rental income earned after we record Candy's first invoice. And of course, in a separate area of records, Candy's balance becomes $5,000. Let's take a look. Again, we click Invoice. Thankfully, we don't have to go back that far to January 31 of 2019. And we choose Candy. Now, Notice the computer knows this is the second invoice and it puts number 2, but you could put any number you want. You could change it to any number you want. And of course, we're going to put the item we're charging her for, which is rent due, even though she already paid it, and we will put the amount of her monthly rent because this invoice is only acknowledging that we have earned so far only 1 month. I will now click Save and Close, and we'll take a look at the numbers. Oh, remember, in this course, click No. We're going to talk about available credits very, very soon. Click No, and when we look at the trial balance, aha, the numbers are exactly as we predicted. Here, unearned went down to $15,000, and rental income earned went up to $3,000. And in Candy's specific records, her balance is now down to $5,000 as of January 31, 2019. Now that's the general idea of keeping records as a landlord while using QuickBooks features to be more precise. However, I want to stress this same point one last time, that you can fix any mistake by opening the transaction from the reports. Just double-click, fix, and save. So again, if I didn't like the fact that my rental income earned was too small, I could double-click this total number in the trial balance and get a report that would show me each individual transaction that led up to that total, just like any other account in the chart of accounts that shows up on the trial balance. And if I found a transaction that offended me, I could double-click, and the very window that I recorded this transaction into would open up, and it would give me the ability to change anything I wanted. By the way, it says past due because even though she paid, we have not yet applied the payments to this invoice. That's coming in another video. But for now, let's make this a million billion. Now, after I make it a million billion and I push the tab key, you see the number becomes crazy. And when I click Save and Close and click Yes, again, just click No for the available credits. We'll talk about that soon. So we're back here at the trial balance, and the trial balance is crazy. In fact, even Candy's records are off the hook, and it seems like she paid us, she has this giant invoice. Well, we can open up that very same invoice in this other report as well. So we can double click, and we can change it back to what it's supposed to be. Push Tab to save the field. Then click Save and Close, and Yes and No for the credits, and lo and behold, we have corrected our mistake, and the numbers come back to the way they're supposed to be.
Chapter 12. Managing Late Paying Tenants.
Usually, tenants stay before they pay. But sometimes tenants pay late. And some don't even pay at all. You still earn the rent as long as they stayed. And now your invoices can be a request for payment. So that's the good news. Money we may receive from late paying tenants is not unearned. Therefore, the invoices we made for late paying tenants must not affect the unearned income account. We must make a separate account in the chart of accounts to track what is owed to us. Now, the name of this new account is called Rent Receivable, and it's also an accounts receivable type. When tenants pay in advance, we want the total of the advance paying customers in the individual customer records to equal the one account in the chart of accounts total unearned rent. And as I explained before, the only way to do that is to make total unearned rent an accounts receivable type of account. Functionally speaking, that's what an accounts receivable type of account in QuickBooks means. It means it's equal to the total of a specific set of customer records. So, if tenants pay after they stay, for example, Betty and Dave are the late payers, we want their total balance to be equal to this new account we're going to create called Rent Receivable. The only way to make rent receivable equal to the total of all the late paying tenants is to make rent receivable an accounts receivable type of account in the chart of accounts. In QuickBooks, that's what that means. It's for functionality, not for accounting theory. That's an asset representing what tenants owe to us. So let's go ahead and make it. From the main menu, click List, Chart of Accounts. Then from the bottom left, click Account, New. Now, this is an accounts receivable type of account. Click OK, or click Continue, and then type in capital letters, rent receivable. Can't really see, but there we are. Now, this account will represent the total money of all late paying clients who owe to us, and this previous account will represent all the money that we received in advance from other tenants that we haven't yet earned. Now, please note, if you do not make a separate account for late payers, then your unearned rent will not reflect the actual amount of rent unearned. You will not have a separate account showing how much is owed to you from late paying tenants. So it's very important that you do it this way. Don't worry, a video is coming soon that will show you what to do if you forget. In other words, if you lump them all together in one receivable account, or you accidentally put one tenant in the wrong receivable account, it's very easy to fix. But for now, let's just jump over to our first example. For example, on January 31, we did call and receive acknowledgement from Betty that she did stay for the month of January. Therefore, we earned and are entitled to January's rent from Betty. We will make an invoice that records the rent earned and the money owed to us from Betty. It's the same like before, but the only thing you have to remember is to change the receivables account. So, we remember that Betty pays $1,000 a month, and we have to create an invoice for Betty. Now, if this is January's rent, that means that the date of the invoice should be January 31st. Now, of course, the rent is rent due. We'll talk about late fees later. And we know that her rent due as of January 31st was $1,000. But here's the most important point. This field up here is brand new. You may look at previous videos and see that this field was not here before. That's because in the previous video, our file only had one receivable type of account in the chart of accounts. As soon as you add another account receivable account, this field will now show up on invoices, giving you the ability to choose which receivables account to put this invoice in. And because Betty is a late payer, we have to make sure we choose rent receivable. After we click Save and Close, we can look at the trial balance and see that rent receivable has shown up for the first time as $1,000. And of course, rental income earned has increased by $1,000. Let's prove that and double click. See, here's Betty's invoice that we added right at the bottom. Here, these two were the unearned, and this is the invoice that was earned. And you could see which receivable account it was put in if you look at the column called Split. Here's our second example. On January 31, we called Dave, and he acknowledged that he did stay for the month of January. Therefore, we earned and are entitled to January's rent from Dave. We will make an invoice that records the rent earned and the money owed to us from Dave. It's the same like before, but just make sure that we choose the right receivables account. So here we are again, and we click Invoice, and of course in this case the tenant is Dave, And of course, we have to make sure that we choose the correct account, rent receivable. And of course, if it's the end of January, then we make January 31 to acknowledge that we earned January's rent. We're not charging late fees yet. That's coming very soon. And Dave's rent is also $1,000. But before we save this, let's predict what the results will be here. Rental income will increase by $1,000 and become $5,000 because we just acknowledged that we earned more rent. And this one, rent receivable, will increase by $1,000 and become $2,000. So let's take a look. Save and close. Sure enough, the numbers are exactly as what we predicted. And if you ever want to know why rent receivable is $2,000, you could open the tenant balance detail and take a look. Notice for Betty, the account on this invoice says rent receivable, even though these two for Alan say unearned rent. Notice for Dave, the account on this invoice says rent receivable, even though for Candy, the other two say unearned. So it's very simple. Early paying clients who have a negative balance should be put into unearned rent, and late paying clients who have a positive customer balance should be put in to rent receivable. Now, in example 3, on February 2nd, we're actually going to receive payment from Betty for January's rent, and it will be directly deposited into the bank account, and here's the number. So it's the same like they wrote a check and we deposit it the same day, but sometimes they do an automatic transfer. When receiving payment for a past due invoice, you must make sure to choose the correct receivables account. So now we're receiving payment for those late invoices, so we click payment and we notice for the very first time, this field shows up on the right side of the payment window. That's because this is the first time we've opened this window after creating a second accounts receivable type of account. You must make sure you have the rent receivable account chosen before you choose the tenant, in this case Betty. If you choose the tenant and you choose the wrong receivable account, the invoice that you're paying for will disappear. So make sure, let's see, watch, if I click here, it says there are no invoices for Betty. That's because her invoices were put in the rent receivable account. So you just have to make sure you chose the right receivables account. Now, if we put in the rent that she paid, $1,000, and again, it said it was deposited directly into cash and bank, so double check that. And it had this long, weird, bizarre confirmation number that, 1122334445, whatever. It's the same as the check number, it's the transaction number, but it was a direct deposit from Betty's account to ours, which is fine. And they actually said the date was February 2nd. So she's paying the January rent 2 days after January. Now, if we leave this check mark, the computer will apply this payment to this invoice, and that's fine. But keep in mind, we have prior invoices where the payments have not yet been applied. So, what we're going to do, just for education purposes, is remove the check mark and don't let the computer apply the payment to the invoice, because we're going to discuss that in the following video. Let's go ahead and click Save and Close. Just click OK for the credit. And now let's take a look. When we look at the trial balance, we see we have a little bit more cash in bank, and our rent receivable actually went down. Double click. It went up for the invoices that they owed us, and then it went down when one of the tenants paid. And of course, cash and bank went up by the payment of Betty for that $1,000 that we got on February 2nd. If we look at her individual records in the tenant balance detail, we can see Betty's balance went up when we acknowledged that she owed us for January, and then it went down when she actually paid for January. And notice these are the account receivable accounts for Betty because she has a positive balance, and the other tenants that have a negative balance have the other account.
And now, my friends, I'd like to give you a quick update about the entire topic that I just put you through a moment ago. Did you know that the recent current version of Enterprise Solutions has actually solved this problem? In the current version of Enterprise Solutions, you can choose a liability account from the same pull-down menu that you choose the specific accounts receivable type of account. This way, if the tenant prepaids, you don't have to put that transaction in an accounts receivable type of account and make it negative. You can put that transaction in a current liability account and it will show up as a positive number. Now, mind you, this liability account that represents prepaid rent or represents the security deposit behaves exactly the same as it would if you used the method that I just discussed. The only difference between choosing a liability account at the moment you record a tenant's invoice or a tenant's payment and choosing another accounts receivable account at the moment you record a tenant's invoice or a tenant's payment, the only difference is that when you move the data from the trial balance to the balance sheet, the liability account that represents the prepaid rent or the tenant's deposit will be on the correct side of the balance sheet. It will still show up as a credit balance on the trial balance. So for those of you who export their trial balance to another software or to Excel, that won't make any difference. It'll just be a little bit easier for accounting people to accept that the account type says a liability account instead of account receivable. But otherwise, everything is the same and both methods will work perfectly.
Chapter 13. Automatic Rent Invoices.
QuickBooks can create monthly rent invoices automatically at the end of each month. This is especially helpful when you have a lot of tenants. We will use the Memorize Transaction List in order to bring this feature to life and make invoices that will be recorded automatically for each tenant at the end of each month. First, we open the most recent transaction of the kind you want to automate. Then, in the ribbon of that transaction, click Memorize. Then, input how you would like to memorize it. This means telling QuickBooks how many months in a row you will have to re-record it, or for how long it will go, and so on. Then all you have to do is save it on the list. That's it. Then the next time you open QuickBooks after the date of the next scheduled transaction, QuickBooks will record the transaction automatically. So let's take an example. Let's memorize Alan's invoice for January. We learned several ways that we could find Alan's first invoice, but I think the easiest is to click on the tenant balance detail, look at Alan, and here's Alan's January 31 invoice. To open it up and have it become the active window, double-click. Now, all you have to do is click the Memorize button, and the Memorize button is in the Main tab of the ribbon. So as long as the Main tab is selected, we click Memorize. Now, all we have to do is describe what we want it to do. First of all, we don't want to be reminded, we want it to happen automatically. How often? Well, we want it monthly. And the next date should be February 28 of 2019. The number remaining we can leave indefinite, and then we can just click OK. Now it's on the memorized transaction list. To prove that, we click List, Memorize Transaction List, and if we make it wider, we can see, here it is. Double-click, and here's the invoice. You can edit the nature of the memorization from the list window the way we control all the other list windows that we learned about in QuickBooks. So, if you want to reopen it and make it bi-monthly or something different, you would click List, Memorize Transaction List, and normally there would be several, and there will be several in a moment. You can click on it, and then at the bottom left, you can click the button that controls the list and click Edit Memorize Transaction. That will give you the ability to schedule it differently. The most important thing to remember when working with memorized transactions is that everything is based on the clock inside your computer. So, if we make the computer think that it's February 28th, and then we restart the computer, we will then see that the computer will warn us that it is time to record Alan's transaction. So first we're going to quit QuickBooks. And while I'm waiting, okay, the bottom right of every screen, if you have Windows and you're looking at your desktop, the bottom right has a clock. And you could right-click where it says the date and time. Now you can't see it on my screen because I'm not showing you the whole screen. But you can right-click in the bottom right of your screen where it says date and time, and then click where it says Adjust Date and Time. If you do that in Windows 10, then the date and time settings will open up. Then you can click this button here, Change. Now, I'm videotaping or video recording this video on February 6, 2019. But I'm going to fool the computer into believing that this is really February 28th of 2019. So I'm going to click Change, and now the computer thinks it is now February 28th, 2019. Now, after that, I'm now going to double-click and reopen the QuickBooks file. And let's see what happens. Ha-ha! As soon as I reopen the file after the scheduled date of a memorized transaction, QuickBooks said to me, hello, you have a memorized transaction waiting because today is February 28th, because I changed the clock, and QuickBooks thinks it's February 28th. So, should I enter the ones that are checked right now? Well, I haven't checked any yet, but if I click here, it means I put the check mark here and says, yes, I want you to enter this. And of course, if you have many tenants, there would be a big long list here. If I click Enter Check Now, then QuickBooks did all the work, even if there were 20, even if there were 100. You checked all of them, clicked OK, and we can prove that it has been recorded properly. If we click the journal and we scroll all the way down, we see that this invoice for Alan, this invoice for, I guess it doesn't say the name, well, it's Meadow Lane, but if we make it longer, you can see that this invoice was for Alan for $2,000, and that unearned rental income went down and rental income went up. Here's the invoice that it automatically recorded, everything like we expected, except it said February 28th. It properly changed his balance. It did everything it was supposed to do. Now let's see that again. Let's memorize Betty's invoice. So all we have to do is go to the tenant's records. Okay, it's better to go to the tenant balance detail, I think. And this is Betty's invoice right here. And we double click. Then all you have to do is click Memorize. Memorize. By the way, it's in the main tab of the ribbon, Memorize. Now, we want to automate this transaction. We want it to be monthly. And we do want the next date to be February 28th because this invoice is really for January. So we do want the next one to be February 28th, even though that's today. Then click OK. And now when we open up the memorized transaction list, memorized transaction, here's Alan's, here's Betty's. They're all checked off. It says the next date because Betty's hasn't been made yet, but Alan's has. And that's how it would look. Now, let's make the computer think it's March 31 and see if both of them have automated transactions. So, we go ahead and quit QuickBooks. And, of course, we right-click on the clock and the date and time in the bottom right of your Windows screen, and then click Adjust Date and Time. Then you click Change, and then we'll now make this March, and we'll make it March 31st, and click Change. Now, let's reopen the file. And now we see one invoice for Alan and two invoices for Betty have been made automatically. The February 28th and the March 31st, because QuickBooks knows all the invoices that should have been made since the last time the file was open. If we click Enter Checked Now, they will be the next ones entered, and we click OK. We know they are the most recent ones entered if we click the journal and we scroll to the bottom, because again, the bottom of the journal shows the most recently entered transactions. And we can see that the computer thinks the date is March 31st of February 19, and it entered it, well, actually it thinks it's this, and here are the dates, and here are the invoices that we just entered. They also affect the tenant's balance, and you can see that now everybody, or almost everybody, has, well, some people still have a positive balance, some people still have a negative balance, but anyway, it affected the balance appropriately. So just to check if you're learning, can you pause this video and memorize Candy and Dave's January invoices so that QuickBooks will make those invoices memorized as well? Go ahead and try, and then press play, and I'll show you how to do it if you forgot. I think the best way to find the invoices is in the tenant balance detail, but you could also go to the tenant's records, which is really the customer center. So if we click on Candy and we click Transaction, we get a list of every transaction Candy had, and we could sort by date, and of course, as we learned earlier, we could take notes about her and so on. But let's double-click the invoice to open it up so that we can memorize it. Click Memorize, and we know what to do. Automate, Monthly, and the next one will actually be February 28th, because she did not have an opportunity to make a February 28th invoice. Click OK, and we're done with that. And now we're going to confirm that that transaction is on the memorized transaction list. Okay, and then the next one will be this date. Believe me, it'll work out. Now we'll do the same thing for Dave. We'll click Dave. Here's the only transaction for Dave. We're going to click Memorize, Automate, Monthly, and we still did not have a chance to make his February 28 invoice, so we're going to put that. Click OK, and now let's confirm that he is also on the memorized transaction list. If all your tenants are on the memorized transaction list and your computer still thinks that it's March 31st of 2019, that means after you quit the file and then reopen it, ha-ha, you now have 2 months worth of invoices to record for both of the tenants that you never got a chance to record February and March invoice. If we click Enter Check Now and click OK, all of their balances have been updated. So we can check this in the tenant balance detail. You can now see that everybody here has both a February and March invoice, regardless of who paid and when. What if the rent changes? Well, here are the steps. First, you have to remove the invoice from the memorized transaction list, then make the first invoice with the new rent amount, then reopen it and click Memorize, just like we showed, and then continue normally. Then everything from that point forward will be fine. So let's change Dave's rent to $1,500 as of April 1. That means we have to make the April 30th invoice because the rent during April was $1,500. So again, let's just follow these steps and you can't go wrong. First, we'll reopen the Memorize Transaction List. Memorize Transaction List. Then click on Dave, and in the bottom left, click Memorize, and then click Delete Memorize Transaction. Remember, you're not deleting the invoice. You're just removing it from the memorized list. Are you sure? Click OK. Now, let's make the April 30 invoice for Dave. Invoice, and we know it's Dave, and then we know that it's April 30th, and that March 30th, we want April 30th, and we know that we're charging him for rent due because we didn't learn about late fees yet, so we can't charge him. He's lucky. And then now his rent going forward is $1,500. So now this is the new rent. This is the first invoice of the new rent because April was the first month he paid the higher rent. So if now we save it, now after we save it, we can go to the journal because we know it's the most recently entered transaction, so we scroll to the bottom, double click, and now we can click Memorize. And we want it to be automatically, and we want it to be monthly, and we want the next date. The date after this invoice will be May 31st because he already made the invoice for April 30 for the month of April. So the next one, the next date is May 31. Click OK. Make sure the original was saved, and that's how you do it. So how would we test it out? Well, after we change it, we will now imagine that we're going on vacation until June 30th and open QuickBooks as of June 30th and see if it works. So we close this out and pretend to go on vacation. Now, in order to fast forward in time, we're going to right-click on the date and time in the bottom right of our screen and then click Adjust Date and Time to have this open up. Again, this is only if you have Windows, not Macintosh. Then click Change. Then let's pretend that we are in, I guess, June 30th of 2019, and we click Change. Now, let's reopen the file and see if the $1,500 a month changes have taken. Double click. And now we see all of the invoices for all of the tenants that we never got a chance to enter because we were on vacation until June 30th. If we click Enter Check Now, we can check out Dave's tenant balance detail, and we can see that those last few invoices for Dave were $1,500. And that, my friends, is how you master memorizing transactions.
Chapter 14. Separating Good and Bad Tenants.
You need a separate receivable type of account to clearly determine how much is owed to you and how much of your rent is still unearned. But what if you forget to change the receivables account at the moment that you make a transaction? Most of the time, you will notice it as soon as you record a payment. If the wrong receivable account is chosen, you will not see the invoices or see the available credits. You will notice the mistake, reopen the invoice or payment, and simply correct the receivables account by changing it to the correct one. But what if it's been wrong for a long time? How do you find and fix that particular mistake? Again, it's very rare, and it's very easy to find, and it's very easy to fix, but we still have to address it. It's very simple. Open the tenant balance detail and follow this simple rule. If the balance in the row is negative, the account should be unearned rental income. But if the balance in the row is positive, the account should be rent receivable. Just follow that simple rule and you will always be able to correct your receivables accounts. For example, let's imagine on April 2, right after Holden went on vacation, Betty transferred $2,000 into Holden's bank account for past due rent. No problem. Let's go ahead and record that. So we go payment, and we're going to make it April 2nd. And how much did she give? $2,000. So it's Betty, and it's $2,000. Okay. This time we can let the computer apply the invoices. I guess it won't really matter at this point. And now all we're doing is this, and we're going to click Save and Close because the money was transferred directly into the bank account. Question, is rent receivable the correct account? Yes, it is. But the only reason it's up there is because QuickBooks remembers Betty has rent receivable with all her invoices. So we're going to click Save and Close. Now, let's take a look at the next one. On April 5th, she gave Holden another $3,000 for future rent. Well, that was nice of her. So we open the payment, and we say, okay, it's Betty. And we say, okay, it's $3,000. See, he didn't know about this. He went on vacation, and these invoices were made automatically. But let's just pretend that we forgot. We forgot to change rent receivable to unearned because the computer remembered that Betty was, a late payer. So they left it at rent receivable, and then we click Save and Close. Okay, now, here's the problem. When we look at the tenant's records, okay, or not the tenant's records, excuse me, if we look at the tenant balance detail, and we look at Betty, here's the problem. The problem is it says rent receivable the whole time. But you see, at this moment, rent receivable was paid off, and at this moment, there was a negative balance. So this payment and all of these invoices have to go in unearned, because if there's a negative balance, it means that it's money that the customer, or tenant in this case, prepaid that we haven't earned yet. So, how do we fix it? Well, it's very, very simple. If the balance on the row is positive, leave it as rent receivable. And of course, this one pays off the rent receivable, so you can leave it as it was. But if the balance is negative, you have to double click on both the payments and the invoices going forward, double click and change it to unearned rent. Double click, change it to unearned rent, click Save, don't worry about the warning, click Yes, and then you go to the next invoice. Okay? And then you change that to unearned rent, click Save and Close, click Yes, keep number, don't worry, we'll worry about the credits later. Okay? Same thing, see the next one, as long as the balance is negative, on this row the balance is negative, just follow the simple rule. Change it to unearned, click Save and Close, click Yes, click Keep Number, don't worry, and then the last one. The last one, because we're paying off or at least this invoice is using the remaining unearned, so even the one that brings it to 0 has to be changed to the one before that. Unearned, Save and Close, Yes. Keep number, and we're good. And now you can see when the balance is positive, it's owed to us, and when the balance is negative, it's owed back to the tenant. So we all agree, in a case like this, that every payment and every invoice starting with April 30 should be unearned and not rent receivable. And that's the basic idea of keeping your receivables in order.
Chapter 15. Charging late fees.
Very often, tenants agree to pay a specific amount in late fee if they pay rent after a specific day of the month. We are already set up to charge late fees and put them on an invoice. A late fee is only one example of how to charge a tenant for something that we earn in income. If you charge for something else that counts as income to you, then you should use this late fee video as an example of how to set it up and how to do it. Do you remember the setup items that we did together? Back at the beginning of the course, after we put in the chart of accounts, we put 2 items on the items list. We put the monthly rent item that we could list on an invoice, and when we list that on an invoice, the money amount for that gets recorded into this account in the chart of accounts, rental income earned. But we also put in the items list the late fee. And we set it up in such a way that if we put late fees on an invoice, the money amount of the late fee goes into that income account, income from late fees. So this is the first time we're actually putting that item on an invoice, and it makes sense that it would get tracked to a different income account. You can add the late fee to an existing invoice or make a separate invoice to charge the late fee. So, example 1. Add $50 late fee to the June 30th invoice for Betty for past overdue invoices. Well, that's very simple. We can just open up her invoice and add it. So if we go to the tenant balance detail, we can find Betty, and we'll find the June 30th invoice and double click. Now right now there's only one item on the June 30th invoice. It's the rent due. So click directly under rent due and add the other item that we've been ignoring all along, late fee. And in this case, the amount she agreed to pay was $50. Notice the amount of the total of the invoice changes, and instead of owing us $1,000 for June, she now owes us $1,050 for June. Specifically, the $50 is for late fees. When we click Save and Close, we can see that Betty's balance has increased by $50, specifically because that $50 was added to this very same invoice for the late fees. Now, if we click the trial balance, you can see that income from late fees shows up for the very first time on the trial balance, and if we double click, we can see that it's specifically from invoice number 10 for Betty. And now let's try this. Let's imagine on July 15th, we made a separate invoice for Dave for a $100 late fee charge. And sometimes it does happen that you put it on a separate invoice. Well, that's very simple. If we look at Dave's balance right now, Dave owes us $7,500. He's about to owe us $7,600, but that would be dated separately because he wants that on a separate invoice. So it's no problem. Invoice, and the invoice is for Dave. Notice rent receivable is correct because Dave has a really big positive balance. And we're imagining that we're charging him this on July 15th. Is that correct? Yes, it's July 15th, and we're not putting rent on this invoice. We're making a separate invoice just for the late fees and telling him, hey, buddy, in addition to the rent that you owe, you now owe this separate $100 as a late fee. When we click Save and Close, we can see Dave's balance has increased specifically by this $100, and it became $7,600. If you look at the trial balance, you can see income from late fees has increased to $150. And when we double click, we can see that the reason that income from late fee is $150 is because we charged $50 to one and $100 to the other, and we could always double click and see who this is and what the invoice.
Chapter 16. Managing Vendor Data.
A vendor is a business or person who provides a product or service to our business that we need. Before you can pay a vendor, they must be on the vendor list in the vendor center. Now, the good news is the vendor center is almost exactly like the customer center, and we've already learned how to manage the customer center, so you don't need a lot of detail when explaining how to do this. However, in this vendor list, Holden only cares about the phone number of the vendor. In another situation, the business owner might want to record the address and the website and so on, but Holden only wants to put the name and the phone number for now, and you could always go back and edit each vendor's records. Now, we learned in a previous video how to put them in one at a time, but in this video, we're going to use the feature Add Multiple Vendors. That will give us the ability to copy this entire list in one shot and paste it right into the vendor center. So if you happen to have 50 vendors or 100 vendors, it would only take you a few seconds to put them into QuickBooks if you already had an Excel file set up with their data. The only thing you have to do when you're adding multiple vendors is arrange the columns to match your Excel file. So, here's the Excel file in question. It has the name and the phone number on each row for each vendor. And of course, if you had more data for the vendor, they would be across the rows. Now, what we're going to do is we're going to click from the main menu, Vendors, Vendor Center. And you can see it looks just like the Customer Center. But this time, we're not going to type them in one by one. This time we're going to copy and paste them right from Excel by doing this, New Vendor, and we're going to click this, Add Multiple Vendors. And you can see a sheet opens up and it looks like an Excel spreadsheet. It has the vendor name, oops, excuse me, this is just a little screen tip here, let's close that. It has the name, the address, if you scroll to the right it has other data, their email address, several lines for their address, and so on. However, you might notice that the columns here do not yet match the columns in Excel. What you have to do is you have to get the computer to match the columns in QuickBooks to Excel. And the way you do that is you go to the top right of this Add Edit Multiple List Entries and you click Customize Columns. On the left are the columns that are not there yet, and on the right are the columns that are already there. Now, phone number is already there, so if you wanted to add something like tax ID, you could do that. Click tax ID and you would click Add. And then if I clicked OK, you could see that tax ID was added as another field in this list. So you could add or remove whichever you want. I'm going to click Customize Columns, and I'm going to simply change the order so that the main phone number is 2 fields away from the vendor name. So I click on Main Phone, move up, move up, move up, move up. Now when I click OK, it's the order that we need. Of course, if you want, you could remove all the other columns. You could click here and you could click Remove, 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 Remove until there's only 3 columns left. And then click OK. Now you won't make a mistake when you copy and paste. All you have to do is go to Excel, click and drag to highlight the vendor name with any other data. Of course, you should see the ribbon if you want to click Copy. Then come back to QuickBooks, click in the top left where the field is, right-click and paste. That's it. And if, of course, to the right of this we had address and email and so on, that would be copied along too. Now, all we have to do is click Save the Changes, and the records have been updated, and we click OK, and we can see we now have 7 vendors on the vendor list.
Chapter 17, Profit and Loss by Tenant.
The Write Checks window is the place to record expenses as you pay them. It's very simple to put in check information. What will happen in the trial balance when we pay an expense? Well, whatever expense we're paying is going to go up at the moment that we pay it, and of course if we pay from the bank account, cash in bank goes down. So that will be the effect that you will see in the trial balance when we record our first check. However, the profit and loss by tenant will actually change if you attribute that expense to a specific tenant. So, if we come back here, we remember that we actually set this up before. We actually put up profit and loss by tenant right here, and I click on it. Now, right now, it's only showing the income by tenant, because those are the only types of transactions that we've had so far in this course. Notice it lists every single tenant that we've had transactions with so far. And in the income section, here I'll make this a little wider, you can see that the rental income is different for each tenant, and then of course it gives you the total of that particular property, in this case Meadow Lane. So you can see across this row all the total rent that we've earned. What's also interesting is in the same income section we have income from late fees, and you can see that only Betty Boop and Dave have been charged late fees so far, which means that the total income that we've earned from them went up. So take a look at Betty. We earned $6,000 in rent and $50 in late fee, but the total income that we earned from Betty is $6,050. We're adding the late fee and the earned rent together. And that's the same thing with Dave. So, what do we have to do? Well, in this example, let's imagine on July 16th, we paid check number 1 for $200 to Staples for supplies for apartment 1A, where Alan happens to be staying. Now, we're not billing Alan for this particular expense. We'll learn how to do that in the next video. So that means that for this check, Alan's balance will not change. It will not go up because we're not billing Alan yet for this particular expense. Just the profit and loss by tenant will change. And of course, the trial balance changes for every transaction. So let's take a look at how to record check number 1. From the main menu, we click Banking, Write a Check. Now we know the money's coming from cash and bank, and we don't want to print the check later. Let's remove this check mark so we can actually physically put in the check number. And of course, you can watch the supplemental videos about how to print checks after you watch the course. But for now, the date was July 16th. And of course, the vendor whom we paid was, who was it? I guess it was Staples. So we'll click here for Staples. We put on our vendor list in the last video, charging $200. Now, after you type in the money amount, push the tab key. Notice, after you push the tab key after putting the money amount is duplicated down here at the bottom. Let's just make these columns more clear so everybody can see. Now, the money amount comes down here so that you can click an arrow, and you get a pull-down arrow where you can click and you get the whole chart of accounts. You're supposed to choose the particular expense that you're paying for. So far, writing a check is easy. The name, the date, the money amount, and the reason is represented by the expense. The only additional step, if you want to track your expenses by tenant, is to come over here, Customer Job, and choose the particular customer. And I forgot who it was. Oh, it was Alan. Okay, so Alan. So we want to make sure we choose Alan. Now you may notice that automatically, by default, the billable button is checked off. Let's remove that because in this case it's not Alan's fault, so we will not be billing this to Alan. We'll learn about billing tenants for their expenses in the next video. Right now, just click Save and Close, and of course, if we come back to the profit and loss by tenant, you can see now supplies expense is deducted from Alan's profit and loss. So we earned rental income $12,000 from Alan, or at least from that apartment 1A, but we had to pay $200 for that apartment in order to make that money, and that's why his net income is down to $11,800. Now, this supplies expense is part of the whole supplies expense for the whole company. If I open the trial balance, you can see supplies expense showed up in the general trial balance at the same moment for this $200. And of course, cash and bank decreased by this $200. If you don't believe me, double click. The last transaction brought cash down by $200. Now, just to be clear, we'll do a second example. Let's imagine on July 17th, we pay check number 2 for $300 to Rex Repair for a repair in apartment 4D where Dave is living. Now, we're not billing Dave. We're assuming that repair is normal and it's not Dave's fault. So Dave's balance won't change because we're not billing Dave. Just the profit and loss by tenant will change, and of course, the trial balance. So, from the main menu, we click Banking, Write a Check. In fact, since we're going to be doing this a lot, we should then click View, Add Write a Check to the icon bar. Now we won't have to remember where it is in the main menu. We can just click Check. Of course, this is check number 2, and the date is July 17th, and we're paying Rex Repair. I believe it was Rex Repair. Yeah, Rex Repair. And the amount is $300. Now, after you type in the money amount, go to the left of your keyboard and push Tab. That will save the field, and it will copy the money amount to the bottom left. Now, the specific expense account is repair expense. And if you were not tracking income and expense by tenant, you would be finished. But because you are tracking income and expense by tenant, we're going to go to Customer Job, and we're going to choose Dave. Notice, automatically, by default, the billable check mark opens up. We're going to click to remove that because we're not billing Dave for this particular repair. We will learn how to do that in the video that follows this one. So, we click Save and Close, and when we look at our profit and loss by tenant, we can see that we've earned $7,500 of rent from Dave, we've earned a $100 late fee from Dave, but now we have this $300 repair expense for that particular apartment, so the net income for that particular apartment is $7,300.
Chapter 18. Billing tenants for expenses.
If you paid an expense that the tenant is responsible for, it is usually acceptable to bill the tenant for that expense. This means you make the tenant responsible for that particular expense. Well, how do you make them responsible for a particular expense? First, you add the expense to their balance in the tenant's records. And you have to give them an invoice which formally requests payment for that particular expense. Now, what are the steps in billing a tenant? And I'm going to physically demonstrate this in a moment. It's as simple as 1, 2, 3. First, we pay the expense normally with a check, and we make the check the same way we made the check in a prior video. Then we mark the check as billable. And in the prior video, the billable box was already checked automatically. So that should be pretty easy. Just make sure the check mark is there when you save it. Then we put the check on an invoice to the tenant. And that takes 2 seconds. It's very easy. I'm going to show you, and that's all you have to do. It's a breeze. However, before I show you, there's some important things you need to know that happen when you bill a tenant for expenses that you have. When you pay the check, your expense goes up because you just paid for an expense, and QuickBooks records a plus to that particular expense account in your chart of accounts. But when you put the check on an invoice, at that moment, your expense goes down. And that's because at the moment you put the check on an invoice, you are no longer responsible for that payment. That means that you no longer have that expense. Your tenant does, and that's why it gets added to the balance. So be aware that those are the 2 things that are going to happen after each step. For example, let's imagine on July 20, we paid check number 3 for $150 to Calvin Cleaners for cleaning a spill in apartment 2B where Betty lives. In this example, Betty is responsible, and we're going to mark it as billable to be able to make her pay for it. So, how do we do that? Well, we open the check window just like we did in a previous video. and we scroll forward to July 20. Obviously, we choose the correct tenant, Betty, and the money amount was $150. Let's just double check that. Yep, $150. And of course, to us, it's cleaning expense. But in order to make Betty responsible, we then choose Betty. Now, notice at the moment we choose Betty, it's marked as billable. In this case, we're going to leave the check mark there. At the moment we click Save and Close, we can open the trial balance, and you can see that cleaning expense shows up for the first time as $150. You can also open the profit and loss by tenant, and you can see that we actually do have $150 in cleaning expense for Betty that lowers our profit for apartment 2B. Now, we're going to put that on an invoice. So let's imagine on July 31, we're going to send her the normal monthly rent invoice, but we're going to add to that invoice this check. So what we do is we click Open the Invoice, and first bring the date forward to July 20, or backward, depending on when you're doing this, to July 20 of 2019. Then, at the moment you choose Betty, this pop-up shows up. And this is a normal pop-up in QuickBooks when you want to bill your tenants for some expense. Leave this selected and then click OK, and this window opens up. Choose billable time and cost. Of course, if we were selling them items or billing them for mileage, these would be the tabs that we choose. But normally we choose the expense tab, and if there were several checks that we wrote as a result of Betty, we would have to choose which ones we're going to add to this invoice. In this example, there's only one, so we click the check mark in the margin, and then click OK, and we notice the $150 has been added to this invoice. Then all we have to do is go to the next row and add the normal rent due. And I believe for Betty, the normal rent is $1,000. So $1,000 in rent plus $150 in expenses means that Betty now owes us $1,150 more at the end of July. Click Save and Close. By the way, don't forget to remove the Email Later button, which will pop up even if you don't click it. That will prevent you from saving. So we will click Save and Close. Now, notice cleaning expense has disappeared from the profit and loss by tenant. It is no longer an expense to you. It no longer lowers your profit. Why is that? Because if you go to the tenant balance detail and you look at Betty, you can see she now has an invoice that's not just $1,000, she now has an invoice for $1,050. Now let's just do a quick second example to really drive home the point. Let's imagine on July 25th, we paid check number 4 for $100 to Rex for repairs on apartment 3C where Candy lives. Let's imagine that Candy is responsible for this repair, and we're going to mark it as billable. So we open the check window, and I believe the date was July 25th. So we make the check July 25th. And of course, we choose Candy. And the money amount, I believe, was $100. And of course, it's repair expense, the most common expense that tenants cost us. Actually, let's be really careful to make sure that it's only $100. Now, because it's for Candy, we have to go to the bottom right and choose Candy. In this case, leave the billable check mark there because we are going to bill this to Candy. After we click Save and Close, we can open up the profit and loss by tenant, and you can see Candy now has $100 in repair expense, which means we have $100 in repair expense, lowering our profit for apartment 3C. However, on July 26th, we're going to give Candy a specific invoice for this. This means we're not going to add it to the rent for July 31. We're going to bill her separately. Billing her separately will still increase her balance by the amount of the expense. So we can click Invoice, and the date of the invoice is July 26th. And look what happens at the moment we click Candy. Aha, she has costs, so we'll click OK. And in this case, it's an expense. It's this particular check. We click here and click OK, and now the $100 has been added. And we can put in the memo any detail that we want explaining why, or you could even type it into the description field, and you might get a little warning message, but you can still do it, and you can describe whatever it was. Make sure the email check mark does not stop you from saving the invoice. When you click Save and Close, look, that money has not, I repeat, is no longer lowering the profit of 3C for Candy, because it is now part of Candy's balance. When we look at the tenant balance detail and we scroll down to Candy, we see she now owes us an additional $100. And that's for this specific invoice that we billed her for separately for the repair.
Chapter 19. Deleting transactions.
Sometimes you must delete a transaction. This happens when you cannot fix or correct a transaction simply by reopening it. Most transactions have a delete command button right in the ribbon. You cannot undelete a transaction in QuickBooks. Once you delete it, it's gone from the file forever, and you would simply have to re-enter it if you needed that transaction to come back. So what is the evidence of a deleted transaction? Well, first, they will be the only transaction numbers missing from the journal. If you remember your journal from one of the earlier videos, you remember that's the only report that shows every single transaction in the order it was placed into the file from the beginning of the file. And that's the only one that automatically lists transaction number in the left column. Whatever numbers are missing, those ones are deleted. And if you needed to find them, then you could always open this report, the voided deleted transaction detail. From the main menu, click Reports, Accountant and Taxes, Voided Deleted Transaction Detail. Now, you may notice some very important point. Your reports may look different if you're using your own file. In other words, I needed to delete some while I was making this course. And anything you choose to delete, you can just re-enter. But if you delete any checks that have been placed on invoices, after you re-enter them, you have to put them on the invoices again. Now that's not always a bad thing. Sometimes you made a mistake on a check or made a mistake on an invoice. Just delete it and re-enter it. So that fixes the problem sometimes, but you have to be able to find where they are. So I want to show you something about this voided deleted transaction report. It opens with only up until today's date, even though I have dated transactions later than the day I'm actually filming this video. And you could scroll up and down, but notice it doesn't just tell you one line about the transaction. It tells you the day it was put, or the time it was put, and the date and time it was deleted for each of the transactions that were removed. Now I could click and choose all transactions regardless of date, and you could see I made many mistakes as I was creating this course, or maybe even changed my mind a couple of times and I had to delete the transaction and re-enter it. But here's the thing that's about to give you total control over any QuickBooks file. There is a rule that says if you did enter the transaction in the file, it is either in the journal or the voided deleted transaction report, not both. So Let's add a column for transaction number and see if this is true. So we go back to the voided deleted transaction report. Right now we don't have a column for transaction number, just date and check number or money amount or whatever. But if you remember, we learned in a previous video that from the top left you can click Customize Report, and then in the Display tab you can go down and click Transaction Number. Then click OK, and we have now entered a transaction number in this report. So the report shows the transaction number, the number that that particular transaction was stamped with at the moment it was recorded. And you can see if you scroll down, I deleted transaction number 1, I even deleted transaction number 3, and I deleted transaction number 9. So at the top of the journal, those should be the only ones missing. Let's reopen the journal, and you can see, first of all, my journal starts with the number 2. That's because number 1 has been deleted. Then it jumps to number 4 because number 3 has been deleted. 5, 6, 7, and 8 are okay, but then it jumps to 10 because, as I showed you before, transaction number 9 is on the voided deleted transaction report. So you're never lost in QuickBooks, and if it's not in either the deleted report or the journal, it means you simply did not record it into this file.
Chapter 20. Let's practice what we learned.
You must practice what you learned to better understand and remember everything that we did in this course. Let's review the transactions that we learned. How should you do this exercise? Well, first, check that your file has the same starting numbers in the reports that I will now show you. Then input the transactions as they are written on the screen, or you could download the file that has the list of transactions so you can read them as you enter them into the computer. If you forget any particular type of transaction, you can review the video that showed that transaction and re-enter it for the exercise. When you finish, compare the results to the results I will show you in this video. If you have different numbers, use what you learned in this course to find and fix your mistakes. Please note, we are assuming all payments from tenants are for normal rent or expenses and not yet for security deposits. The following videos after this one will explain clearly every issue related to the security deposits. So, this is what your trial balance should look like when you start the exercise. You could download the file, or you could keep the file you're using as long as you're starting with these numbers. Here's what the profit and loss by tenant should look like at the very beginning of this exercise. Now, here are the transactions. There are 15 of them. Enter them one by one as carefully as you can. You can pause this video in order to read from the screen and enter it into QuickBooks, or as I said, you could put it in a file or download the file and read it from that. Enter each of these transactions exactly the way we entered them in the previous videos of this course. Now, when you finish, your ending trial balance should look like this. If it doesn't, you have to use the techniques that we learned in this course to find and fix your mistakes. Here's what the ending profit and loss by tenant should look like. And again, if it does not look like this, especially for the tenants at Peyton Place over here, you have to go back and try and find and fix your mistakes. Now, the two new tenants have balances in the tenant balance detail, and here is what their tenant balance detail records should look like for everything we did. Remember, you have to make sure that you have the right rent receivable or unearned rent account at any given moment. I wish you good luck, and after this we will learn all about security deposits.
Chapter 21. Setting up for security deposits.
A security deposit is money a tenant pays when they move in, but it is not normal rent. It is counted separately from the rent because it is intended to cover any costs that the tenant is responsible for, like repair or cleaning. Sometimes it is used as the last month's rent if the tenant does not pay. You may not need to do anything. Look, you could just put the deposit and the rent into the same place and not separate them if you don't need to. And there are many landlords in this country that don't need to keep separate records of the security deposit. For those who don't need to show in their records the total tenant security deposit as a separate number, you can just look at each tenant's balance and be aware that includes the security deposit. However, sometimes landlords are required to show in their records a separate total for all the security deposits from all the current tenants. If so, you must first set up the file for the security deposits. So what does the file need? Well, first, it needs a separate accounts receivable type of account to represent the total of all tenants' security deposit. Well, why does it have to be an accounts receivable type of account? We discussed this several times earlier in the course. If you want the total of all the late paying customers to add up to one account, rent receivable, you have to make rent receivable an accounts receivable type of account. If you want the total of all early paying customers' balance to add up to the unearned rent account, then you have to make the total unearned rent an accounts receivable account. And it's the same thing with everybody's security deposit. If you want the total balance of each individual tenant's security deposit to equal one account called security deposits payable, you have to make that account an accounts receivable type of account. And we'll name it security deposits payable. So, from the main menu, click List, Chart of Accounts. From the bottom left, click Account, New. Then, of course, this is an accounts receivable type of account, and we're going to name it Security Deposits. Let's make it capital because we want to separate it. Security Deposits Payable. And we leave the name payable to make sure that if a person reads this, they know that we owe this money back to the tenant, even though it might show up on the wrong side of the balance sheet. So what else does the file need? Well, it needs a custom report showing each tenant's individual amount of remaining security deposit. It has to have a tenant balance detail that shows only the normal rent, and that can be two separate reports showing two separate things. The tenant balance detail that shows only the normal rent includes both the rent receivable and the unearned. You need a separate balance per tenant report for security deposits if you want to track what remains. In order to do that, you have to filter the customer balance detail for just the transactions that involve the deposit. And then if you want a report that shows normal rent, you have to filter the customer balance detail for both the receivable and unearned rent. And they're both very simple. Please follow step by step. From the main menu, click Reports, Accountant and Taxes, Reports, Customers and Receivables, Customer Balance Detail. Again, Reports, Customers and Receivables, Customer Balance Detail. Now, in the top left of the custom report, we're going to click the button, and this time we're going to click the Filter tab. Now, we're going to filter by account. First, we want to have a report that shows only transactions related to this account, security deposits payable. That's all you do. Then when you click OK, you notice there's nothing there. Well, of course there's nothing there. We have not yet recorded any security deposits yet. But let's finish customizing it so that we can identify it. Just like we learned in a previous video, click Customize Report, and again click Header Footer, and then you can click Security Deposits Payable. Just like that. Okay? Then we can remove, all the other irrelevant data, and then click OK. And here it is. Now we can click View, add customer balance detail to the icon bar, and again in the icon bar change the name to Security Deposits Payable. And then click OK. And now you have a report that shows you only the amount of security deposit owed back to each individual tenant. But we're not done, because this main one is going to show you everything. We never filtered this, so both the security deposits and the normal rent are going to show up on the original one. So we have to make another customer balance detail into a special tenant balance detail. Again, click Customize. Again, click Filter. Again, click Account, because we're filtering by account, but careful, this time we're going to choose multiple accounts. And we only want two. We want the, we want the rent receivable and unearned rental income. Those are the two we want because they show what's owed to or from Holden for normal rent and not include anything about the security deposit. Click OK, then click Header Footer and change it to only rent balances, which means it does not include the security deposit, but it does include everything else. Click OK, and now it looks the same as the original one, but again, that's because we haven't had any deposit transactions. The next video after we get deposits, you will see these reports will then look different. But we have to save this one as well. View, add customer balance detail to the icon bar, and we're calling this rent balances. Rent balances. And then click OK. And now we have two reports. One that shows just the security deposit by tenant, and this shows what's owed to or from the tenant regarding rent, but it will not include anything regarding the security deposit. Remember, the original report will show both. And again, you could stick to the original report if you don't need to separate the security deposit for any reporting reason.
Chapter 22. Security Deposit Transactions.
Sometimes tenants will give a separate check for the security deposit and then give another check for the first 1 or 2 months' rent. Usually we get one check from the tenant that covers both the deposit and the first month's rent. Here's situation 1, 2 separate checks. We would record the check for the rent normally the way that we learned, and we would even record the check for the deposit normally, except you must choose the security deposit account at the moment you record the payment. So, here's an example. Let's imagine on January 1 of 2020, Gary Greenstein, who's already on the tenant list, moves into apartment 7G, and let's imagine his monthly rent is $800. He gave you 2 checks on January 1. Check 1983 for $800. This was specifically for the security deposit. Then he gave you on the same day check 1984 for January's rent, and they were both $800 checks. So let's take a look at how we would record this. We open the payments window just like we did before, and of course we're going to put the date. We're imagining it's January 1 of 2020. And of course, the new tenant that we already put on the list is Gary Greenstein. And he gave us check number 1983. And it specifically said in the memo for January rent. So that check for $800 is January rent. So that's normal, which means we must leave the unearned rental income receivable account here because we did not earn January's rent on January 1. We will soon. So that's a separate $800 check, save and new. Click OK. Now, for the other check, the check for the deposit, it's still January 1, and it's still Gary Greenstein, and it's a different check number. He actually gave check number 1984, and check number 1984 was for $800, but it is not unearned rent. Check number 1984 is specifically for the security deposit, so we will instead choose security deposits payable. Now you can put in the memo security deposit for Gary Greenstein. Now when we click Save and Close and click OK, you can see on the trial balance, security deposit payable shows up for the first time as $800. And if you look at the specific security deposit report, you see only Gary Greenstein, nobody else. Now this situation is probably the one you would expect. You receive one check in total for both the security deposit as well as the first 1 or 2 months' rent. If that's the case, you must enter this same check twice. The deposit amount goes into the security deposit account, and the remainder goes into the normal unearned rent account. It's very, very simple. So here's an example. On January 1, 2020, Harry Houdini, already on the tenant list, by the way, moves into apartment 8H, and let's say his monthly rent is $900. He gave you one check on January 1, check number 6611 for $1,800. And this was for both the security deposit and the January rent. Again, you must enter this same check twice. The deposit amount goes into the security deposit account, and the remainder goes into the normal unearned rent account. Let's take a look. So we click Payment, and luckily it remembers that we're on January 1 of 2020, and the check amount is $1,800, push tab, and of course the tenant is the new one, Harry Houdini in 8H. Now, the first check will be for the normal rent, or the first entry will be for the normal rent. So we will leave unearned rental income, and we will put check number 6611, and then you can put half check for rent, or anything in the memo that helps you. Now again, be careful. We're imagining that you're depositing this on the same day, so you're not using the undeposited feature, and we're pretending. So the payment amount is not correct. Even though the check's total was $1,800 over here, we have to enter it twice. We have to put $900 here. So I made a mistake a minute ago. Only put $900 because only $900 is unearned rent, and it's only half the check is rent. Then click Save and New and do the exact same thing. Again, it's Harry Houdini, but this time it will go into security deposit payable. So you put the same $900 and you put the same check number. That's very important that you put the same check number so we know what's going on when we get the bank statement. This half for deposit, or whatever you want to put that helps you. Now when we click Save and Close and click OK, we'll look at the security deposit report, and you see the security deposit report shows only Gary Greenstein's deposit without messing up any of his rent. It shows only Harry Houdini's security deposit without messing up his rent. And the total equal $1,700, which is equal in the trial balance to the general ledger account that we created, security deposits payable. So we have achieved our goal of separating out the deposits and having one account that shows you the total of everybody's deposit. Now we're all set and we know how to do it. However, let's explore the reports a little more deeply. If we look at the other tenant balance detail, the one that just only says rent balances, if we scroll down to the two last tenants, you can see that it's only showing the unearned rent part, not anything to do with the security deposits over here. So it's better to rely on this rent balances report rather than the main one. If you go to the main one that we were using the whole time, this one is not filtered. So if you go all the way down, this will be the one that kind of mixes the tenant's rent or the unearned rent mixed with the security deposit. So keep that in mind. You have three separate tenant balance details.
Chapter 23. Applying expenses to security deposits.
When you apply security deposit to an expense that a tenant cost you, it's the exact same procedure as applying unearned rent to expenses, and we learned that in a previous video. First, we record the check or payment and we mark it as billable to the tenant. Then, we placed it on a separate invoice from the next rent invoice. Now, if you're paying an expense that you're going to apply to the security deposit, just remember, it has to be on a separate invoice, and you'll see why in a moment. Then, the only extra thing to remember if you're applying it to a security deposit and not the unearned rent is to make sure at the moment you make the invoice, you choose the security deposits payable account. Otherwise, it will be deducted from regular unearned rent instead of being deducted from the security deposit. But it's very easy. For example, let's imagine on January 15th, Gary in 7G breaks the fridge and caused repairs worth $200. So on that same day, Holden, the landlord, paid Rex Repair Shop $200 with check number 1787. So let's just go ahead and do that. So that was a check, and it was payable to Rex Repair. Here he is. Good. And it was $200. And it was January, you know, we're going forward in time here. So for me, I'm going forward in time. I don't know when you're watching this, but the check he wrote on January 15th, I believe it said January 15th, yes. And it was 1787. So check number 1787. That's fine. Okay, good. So here's all the information, but the most important thing is that this is billable to Gary in 7G. And of course, the billable check mark comes up automatically because that's the way it's set in the preferences window. So that's the first step. Click Save and Close. And don't worry about this, just click Cancel. Now on that very same day, January 15th, Gary told you he was moving out at the end of January. The rent he paid for January will be applied to the invoice that QuickBooks will make automatically at the end of January. Therefore, the lamp cost must be applied to the deposit. So let's make an invoice exactly on January 15th, the day we were informed he's moving out, and that his rent will be applied to the invoice that gets created at the end of the month, so we can only apply this cost to the deposit. And it's very, very simple. We just make an invoice, and we date it January 15th, it's already there, And then, of course, the invoice is to Gary because he's the one who has to pay. And yes, where it says billable time cost, you're going to click OK, and this expense, the check we wrote to Rex Repair as a result of Gary, is going to be placed on this invoice. So we click OK, and it looks just like we did in an earlier video. The only difference is that you must change it to security deposit payable. This means this invoice will be applied to the security deposit. So we click Save and Close, and then we, it doesn't let it, it's always a problem. You have to kind of remove the email later thing. But now click Save and Close. And now when we look at the security deposit report, we see that even though Gary had an $800 security deposit, we applied this invoice for $200 against that security deposit. So Gary would be only entitled to $600 of his security deposit when he moves out.
Chapter 24. Giving refunds to tenants.
There's good news and bad news regarding the transaction when you pay a tenant for the money you owe them when they move out. The good news is that it's very simple to refund money to a tenant moving out. You write a check the same way that we learned. You include the tenant as both the payee and as the job, just like the way you saw it earlier in the course. The only thing to note is that the account in the lower left field is the accounts receivable account that the money's coming from. So if you're paying them back the security deposit, you would choose the security deposit account. If you were paying them back unearned rent, you would choose the unearned rent account, and so on. So here's an example. On January 31, Gary in 7G moves out. First, we'll make his January invoice. Then we'll write him a check for the remainder of his deposit. So first we have to make an invoice, and the invoice we're going to make is for Gary, and of course the date is far in the future here. The date is January 31 of 2020. Here's the invoice. Now this invoice is for January's rent. So the invoice which will be applied to January's rent will go into unearned rental income because you're billing him for the normal monthly rent because he did stay during the month of January. So you would put the normal monthly rent, and we know that Gary's rent was, well, if we forget, we could always look here. Go down to Gary. Gary's rent was, I think, $800 a month. Okay, so there you go, amount $800. There you go. And then when we click Save and Close, that's it. Now, all we have to do is write him a refund check for his security deposit. We can look at the security deposit report and see that the remaining security deposit owed to Gary is only $600 because of this invoice that we had printed and given to him regarding the fridge. So all we have to do is open the check window, bring the date forward to January 31 of 2020, and of course we have to choose Gary as the payee and as the job. Now, we're not going to put billable. Now we didn't put billable. That's okay. There were nothing there. But what we have to do, you see, is choose an account. Now, the account we're going to choose is security deposits payable. And the amount that we're going to put is $600 because that's the amount. So it's going into security deposits payable specifically for Gary, $600. Now, this is the check that you could put in the memo. This is your remaining security deposit. And then, of course, you can print him the report to show him why. So we click Save and Close, and now you can see that we owe Gary 0 security deposit because we gave him a check on January 31, and this is the actual check number. Do we owe him any unearned rent? Well, if we look at the report called Rent Balances, we can see, if we look for Gary, down at Gary Greenstein, his unearned rent balance is 0 because the January 31 invoice cancels out the January 1st payment. Now here's the bad news. If you owe the tenant both the deposit and the unearned rent, you have to write 2 checks, one for the unearned rent refund and one for the security deposit refund. Sorry, folks. For example, on January 31, Harry in H8 moves out. Now, do not make his January invoice. Why? Let's just imagine the apartment was deemed a health hazard and law forbids earning rental income and Harry must go. Therefore, we're not going to make him an invoice, we're not going to acknowledge that we earned, and we're not going to charge him. Instead, we must write him 2 checks, one for the unearned rent and the other for the deposit. So again, we open the Write a Checks window and we make it January 31 of 2020, and both the payee and the customer job is Harry Houdini. Now, the amount has to be $900, but I just want to show you why. There are going to be some people out there that are going to try to write him one check for $1,800, and they're going to put $900 on one row, and they're going to put $900 on the other row, and they're going to choose Harry Houdini for both rows, and they're going to put the security deposit on one row, and they're going to put the unearned income rent on the other. Now, all of you who are trying this, you are logically correct, and it should work, but it doesn't. It doesn't because if you try this, you get a message that says you cannot use more than one AR or AP account in the same transaction. So I'm very, very sorry. Let's allow this first one to be the security deposit refund. So we'll change this to $900 and we'll simply write him another check. Let's get rid of this row as well. Be careful. So this check for $900 will decrease security deposits payable as well as the balance of Harry in that particular account. So we write the check, print, whatever, save and close. And now, when we open up the security deposits, we see Harry no longer has a security deposit with us because we gave him a check on January 31. You might also notice, by the way, if you open the trial balance, security deposits payable is now 0. And it's now 0 because we gave back everybody's deposit in the last couple of videos. So, we now have to write him a second check for the unearned rent. And you can see if you open up the rent balance, the other receivables account, you can see that this shows just what they owe for regular rent. We still owe him $900 here. So let's write him a check. And again, this time it's the same Harry Houdini in both places, here and here. Okay, and the money amount, unfortunately, for the second check is $900, and this time it's coming out of unearned rent. Unearned rent.
Chapter 25. Recording Shared Utilities.
Examples of shared utility costs are all tenants are under the same electric meter, the cable internet is paid by the landlord for the whole building, or water could even be billed under one meter. Why is it billed differently than repair or cleaning? Well, in this case, there's no specific event or service date that you wrote a check for. There is no specific check or bill that you can put on a tenant's invoice, like we did when we did repair and cleaning billed to the tenant. So what can you do? Well, if you agree with the tenant of the amount of utility charge that will be added to their monthly invoice, then you can create an item on the items list that will be added to the monthly rent invoice. And that item will be for that tenant's share of the utility. So remember we talked about the items list. We said, look, if you earn the monthly rent and you put that item on an invoice, the income account, rental income earned, should increase. And we even learned another example of items. If you put a late fee on an invoice, then the account in the chart of accounts that should increase is income from late fees. Well, then doesn't it make sense that if you put an electric charge on the invoice, that the account that should increase for that item should be income from electricity? Well, you could. You could put another income account called income from electricity, and then when you put the utility charge on the invoice, you can make that account go up, if you want. But if you do it that way, you would have to subtract out what you actually paid for electricity as an expense for the whole building in order to determine your real electricity cost. So that's not the proper way to do it. What is the proper way to do it? Well, instead of having the item connected to income from electricity, which is not right, you should instead have the item be connected directly to the electricity expense account, the main one. This way, when you pay electricity for the building, it goes up, but then when you charge the tenant the electric expense, it will decrease the overall electric expense at the moment you charge the tenant. Just like before, we click List, Item List, and the Items list opens. Now, from the bottom left, let's just make this a little bit wider so we can see the account. From the bottom left, we click Item, New, and this counts as a service. And we'll call this, capital letters, Tenants Electricity Share. So we're charging the tenant $25 a month for their share, their agreed upon share of electricity. But the account that we connect it to is electric expense. So when we place this on an item, instead of an income account going up, it will be an expense going down. We click OK, and now let's take a look at an example. Let's imagine on February 5th, we paid the whole Peyton Place building electric bill, $100 to Con Edison. That's the electric company out here in New York. So let's go ahead and just do that. Now, before we do that, you may notice that there is no electric expense at all on the trial balance because we have not used it yet here in the course. So let's go ahead and write a check. Let's make sure it says February 5th. And by the way, to make this course a continuous little story, make sure it's February 5th of 2020. Now, Con Edison is the electric company out here in New York. The amount we're paying for the whole building is $100, and the name of that expense is electric expense. Notice we do not put the customer because we are not putting this specific check on an invoice later. So don't put anything here, just click Save and Close, and notice that electric expense showed up for the first time in the trial balance as $100. Now let's imagine on February 28, we gave Freddie Froda the February 28 rent invoice, and we're going to add to the normal rent the $25 agreed upon electricity charge. That's Freddie's share of electricity. No problem. We open the invoice, and we know that this is the February 28th of 2020. And remember, this invoice is coming from, well, you have to check. If you go to the rent balances and go down to Freddie Froda, you can see Freddie Froda has a zero balance, so he didn't pay you the money in advance, which means this is going to go on rent receivable, because he has a zero balance. He did not pay February's rent in advance. Anyway, we choose Freddie Froda, And now we're going to put his normal monthly rent due. And if you forget how much the rent is for a particular tenant, again, you could look right on the rent balances and you can tell Freddie pays what? It looks like he pays $1,000 a month. So we'll put $1,000 on the invoice. But now we have to add to the invoice the tenant's electricity share. And it says, this is associated with an expense account. Yes, we do want to continue. We want the, notice it remembered, by the way, the $25, because that's what we put when we set it up in the items list. You can't do that with a tenant's rent because everybody's rent is different. But you can do that if they all agree to pay the same electric share. So, what will happen when we click Save and Close? If we open the trial balance, you see that the general electricity expense for Peyton Place has decreased by $25. And if we double click and open it up, we can see that originally we paid $100 on the 5th, but because we sent Freddie Froda an invoice for $25 for this particular expense, it went down. And if you go and you look at the rent balances specifically for Freddie Froda, you can see his balance went up not only by the monthly rent, but it also went up by the amount of electricity charge.
Chapter 26. Charging Mobile Home Utilities.
Owners of mobile home communities have regulations on how they charge and collect for electricity. Each tenant or occupant must have their own meter. Landlords must charge what is on the meter, no more, no less. Usually there is a fixed cost per month plus a charge per usage. As soon as the landlord charges the tenant for the electricity, which means he put the electrical charge on the invoice, then the landlord is immediately responsible and owes the electricity cost whether the tenant pays or not. So what's really happening? Well, the tenant uses the electricity. The landlord owes the electric company at the minute the tenant uses the electricity. So you need to put an account in the chart of accounts called Electric Costs Payable, and that account should be a current liability type of account. Let's take a look. Just like we learned before, we click List Chart of Accounts, and then in the bottom left we click Account New. Now, this type of account is Other Current Liability. Other Current Liability because we're going to pay it soon. Click Continue, and then we type in the name, which is Electric Costs Payable. Electric Costs, let's make it capital. Electric Costs Payable. There we go. Now we have an account in the chart of accounts that represents the money that the landlord owes to the electric company as soon as they charge the tenant for the electricity. So we have to bill the tenant. The tenant's balance goes up by the amount of electricity charge that we put on the invoice. When we put the electricity item on the invoice, the landlord owes the electric company the money for the tenant's electricity. What we have to do is make an item on the items list that is connected to the liability account that we made, and that will give us the ability to fulfill these billing and reporting requirements. So let's go ahead and do that. Just like we learned and used several times, List, Items List, and in the bottom left button of the Items List, we click Item, New. Now, this is a service because we're providing electrical service, and we'll type electricity space flat monthly. So This item will represent the flat charge per month regardless of how much they use. And for now, we'll put $25 a month. It means no matter what, they pay $25 a month, and then additional to that, they pay for the usage. Now, we'll click the by the way, you could change this on the invoice or come back and change this anytime. But we click this in the pull down, and we connect this account to the only current liability we have, electric costs payable. Then we click Next. Now, we're going to put another item, electricity usage charge, which means this will be multiplied by the electric unit, and let's say on the most recent bill, 0.50. It was 50 cents a watt or an amp or a volt or whatever unit the electric company charges on. It's 50 cents each one. So now we have two items that are connected to the liability account. One is the flat fee and the other is the usage. Some people like to lump them together and then just adjust it on the invoice, but I think it's better for the tenant to see how it's broken down in case there's any discrepancies later on. For example, let's imagine on March 1, we made a new arrangement with Ellen to bill her for electricity the way mobile home community owners must do. There's a $25 flat fee for electricity plus her current voltage, wattage, ampage, usage, whatever. On March 31, we read the meter and we see that she used 60 watts, or let's just say 60 units of electricity, and the electric company bills at 50 cents per unit. We will add this charge to the March 31st invoice. So, Ella's next invoice is March 31st, so we click Invoice, and we fast forward to March 31st, and be careful, in our little story, it's March 21st of 2020. Now, we agree with rent receivable because if we look at the rent balance report and we scroll down for Ellen, we can see she has a positive balance at the moment we're making this invoice. So we agree that it should be rent receivable. And then the tenant is Ellen, and we have almost all the information we need. So her regular monthly rent, I happen to remember, was $2,000 per month. But we have to add to this invoice the electricity flat fee, which is $25 a month, and we also have to add to this invoice the electricity usage. It's 50 cents a unit, and the instructions specifically said that we used 60 of those units during March. So you type in 60 in the quantity field on the row of the item of electric usage, and to save just the field without losing the window, go to the left of your keyboard and push Tab. Now you have the electricity flat fee plus the electricity usage plus the original rent on one invoice. Look what happens when you click Save and Close. When you go to your trial balance, you see that electric costs payable shows up for the very first time as $55. This is the first time you've charged electricity, so it's the first time that you owe this liability to the electric company because of your tenants. And now finally, on April 5th, we paid the electric company what we owe specifically for the tenant's electricity. So, how do we do that? Well, it says that the electric costs payable are $55, so we have to write a check to the electric company. In New York, the name is Con Edison, it's only for example, and we have to make it for $55. And again, in our little story, it's April 5th of 2020. And this time we are not, I repeat, we are not going to put electric expense because it is not our expense. we are paying what we owe in electric costs payable for the tenant. So we're decreasing this liability. The cash will go down because we're paying it, and the amount of electric costs payable that we owe as a result of the tenant will go down because we are now paying it. We are paying the tenant's electricity, not our own, and not the general electricity of the building. When we click Save and Close, you can see that electric cost payable has gone down to 0 because we just paid it.
Chapter 27. Now, let's practice the advanced ideas.
You must practice what you learn to better understand and remember the things that we did in this course. Let's review the transactions that we learned since the last exercise set. How should you do this exercise? Well, first, check that your file has the same starting numbers in the reports that I will now show you. Input the transactions as they are written on the screen or in the downloaded file. If you forget, review the video that showed the transaction and re-enter it for the exercise. When you finish, compare the results to the results I will show you in this video. If you have different numbers, use what you learned to find and fix your mistakes. So, here's what the starting trial balance should look like. And it should look familiar. These are the numbers after the last video. Now, here's the transaction list for this exercise set. You could pause the video at this point if you want to, or you could download the available file to read the transactions one by one and record them into the file provided to see if you get the correct ending numbers. Here is what the ending trial balance should look like. If you have any differences between your June 2nd trial balance and this June 2nd trial balance, then you have to apply the techniques that we learned in previous videos to find and fix your mistakes. Here is the tenant report, or the tenant report for the 2 new tenants in this exercise. The top one is for Joanne, and the bottom one is for the Colonel. These 2 reports are only the reports related to their rent and not related to the security deposit. So their separate rent balance reports should look like this when you finish this exercise. Here's what the entire security deposit report should look like at the end of this exercise. And again, if you don't have these exact numbers in this exact way, you should use the techniques that we learned to find and fix mistakes. If you have any questions, send me an email immediately and I will get back to you very quickly, and I will be very happy to help you with this exercise. Good luck, and I'll see you in the next video.
Chapter 28. Setting up to track leases.
What is a lease? Well, a lease is a contract between the tenant and the landlord, where the tenant agrees to stay and pay for a specific number of months at a specific monthly rate. This contract is satisfied over time as the tenant continues to stay and pay. What information do you need about a lease? Well, you need a report that shows the total balance of the lease compared to the amount that has actually been paid thus far. You need a report that shows the percent complete of the lease, and you need to see at any moment how many months remain on the lease. So how do you do that in QuickBooks? Well, all contracts that are satisfied over time are put into QuickBooks as estimates. You first make the estimate like you would make any other QuickBooks document and put in the lease information. Every month you make an invoice against that estimate, and then QuickBooks will be able to give you the lease information with one click of a mouse. So what are the setup steps? Well, first, you have to make sure that progress invoicing and estimates are activated in the preferences window. So if you come back to QuickBooks here and you click Edit Preferences, you can see that one of the categories is Jobs and Estimates. And in the Company Preference tab, you have to make sure that Do you create estimates is checked yes, and do you do progress invoicing, and that should also be checked as yes. Then you can make an estimate, and the estimate will give you the report of the progress of the lease. Click OK, and we'll move to the next step. Now, we will customize and put up the reports that show the progress and information about the lease. So, from the main menu, we click Reports. Now, the category of reports that relate to estimate is under Jobs, Time, and Mileage. These reports here that say Jobs Estimates versus Actual and Job Progress Invoices versus Estimate, these two are the most important ones. So let's put them up, and let's actually customize them before we put them up, and we will customize them in the way that we learned in prior videos. So click Job Estimates versus Actual Detail. Now it gives you a choice of which particular tenant or building. Let's just leave Meadow Lane because we can filter this report later. Click OK, and now all we're going to do is click Customize and change the header. Instead of saying Estimates versus Actual, we'll put Progress on Lease, and this report will actually show the money amount. So we can put financial progress on leases, because this will be the report that shows the total money of the lease compared to the total that you have earned during the lease at any given moment. We can remove some of the irrelevant information, just like we did in previous videos. And now we have financial progress on the lease as the title. We can even make this column a little wider, or you can do any kind of customization you want and then put it up. Once the report looks the way you need it to look, click View, add this report to the icon bar, and let's make the title in the window or the label in the icon bar the same as the title on the report. Financial Progress on Leases. Financial Progress on Leases. Click OK, and now it can open up from the icon bar exactly the way we set it up. The other report is this: Reports, Jobs, Time, and Mileage, Job Progress Invoice versus Estimate. Now for this one actually shows the percent complete. So we're going to click Customize and click Header Footer, and we're going to put percent progress on leases. And now we have two reports that will give us what we need. We have one report that will show the percent complete and the percent remaining, and another report that will show the money amount that's complete and the money amount that's remaining. And these are the reports you would check during the life of the lease. And last but not least, make a customized lease document from an estimate template. And we learned in a previous video how to customize the documents. First, we have to open the document itself. From the main menu, click Customers, and then put Create Estimate. Now you can see in the top left, it already comes with 4 different templates for estimates: proposal, quote, and so on. But we want to make one that says Lease. So as we learned in a previous video, we click Formatting, Manage Templates, and the Manage Templates window opens up. We also learned in a previous video that you have to choose the one that most closely approximates what you need, and then click Copy. And what QuickBooks will do is it'll create a new one that's really a copy of the old, and you have to just change the name and call it Leases. And click OK, and we now come to the basic customization window. If you remember, the only thing we really need to change is the word in the top right here. We need to change that word from estimate to lease. And we can't do it in the basic window. We have to come down here and click Additional Customization. And all you have to do in the title bar, in the field that allows you to change the title, change the word estimate to lease. Now, while you're here, you can change anything else you want. You can explore and experiment with all the other changes. And if you really want to have total artistic control over the look and feel of your estimate, you can click this third window, Layout Designer, and then it will allow you to play around with it and change the position of text and boxes and so on. But we only need to click OK. And then click OK again, and notice we now have one template that says lease. We can choose another template that says quote or another word, but at least if we click here, we know we're putting in a lease.
Chapter 29. Managing and Recording Leases.
What happens in QuickBooks during a lease? Well, you first enter the main lease information into the lease document. That was the estimate that we set up in the previous video. You can add any details from the contract that you need to always remember in the memo field or the description field of the estimate. Any other long-term information about the lease should be kept in the Notes section of the Customer Center in the Tenant's records. You can attach a photocopy of the actual lease from the paperclip icon in the ribbon of the lease window. So if you have the whole contract scanned in, you can attach it to the lease that you're making in QuickBooks. Now, once your lease document is all set up, all you have to do is open the lease each month to record a monthly invoice against the lease. That's it. There's no other setup information, and there's nothing else to do but act normally each month, and then QuickBooks will give you those reports about your lease. For example, let's imagine on June 1, we made a lease with Ellen for 24 months, same rent, $2,000 per month. That's all you need to put into QuickBooks. Everything else will be on the actual lease document that you can scan in and attach, or you can type in the details into any of the fields in the estimate or the Customer Center. From the main menu, we click Customers, Create Estimate. And we have to make sure that the estimate that we choose is lease. This way we know it's a lease. We can close this panel. We're familiar with QuickBooks documents. We were going forward in time, so I believe the date of the lease was June 1 of 2020. And the tenant that we had the lease with is Ellen. Now watch how we do it. We choose the rent item, the same one that's connected to rental income. However, because the instructions specifically say 24 months, that means that we have to put the number 24 here, and the rate is Ellen's monthly rent, $2,000. So this is a $48,000 lease. It's a $48,000 estimate because it's $2,000 a month for 24 months. That's all you have to do. If there were important details that you had to remind yourself of every month, you should put it here in the customer message or here on the memo, or even type it into one of the lines of the description field, even if you don't have another item to put, because you're going to reopen this estimate every single month. Click Save and Close. Now the estimate is not a transaction, and it will not show up on any reports that have an effect on your balances. But the lease will show up in two places that you could use to reopen the lease to be able to enter the monthly invoices. First, one of the reports that we set up in the previous video was percent progress on leases. That estimate is there even though it's 0%. And you can double click and then click Create Invoice, and whatever invoice you create from this window will be matched against this lease. The other place you can look is here in the tenant's records. If you click the tenant's records and then click in the left panel on the particular tenant, you will not see the lease if you're showing transactions. Even if you're showing all transactions, you have to click the show pull down and actually click estimates, and then the estimate will show up, and then you can double click, and then once the estimate is in front of you, you can click Create Invoice. Now, if the lease happened on June 20, then the first invoice we create will be dated June 30. So, we don't want to create it for the entire estimate or even a percent. We want to create it for selected items. Selected items is what you have to choose because we're doing the monthly rent one of 24 months. We click OK and we get this window. Specify invoice amounts for items on estimate. So we want to show quantity and rate by clicking here. We could even show percent, but it wouldn't help us, but we might as well show it because it gives us more information. But the quantity here will stretch the column. Quantity is 0. Now what we're going to do every time we put in an invoice against this lease, we're going to change the quantity by 1, and push the tab key. And now we can see each month is only 4.17% of the entire lease. We click OK, and we notice 1 month came onto the lease for the invoice, and this monthly invoice is $2,000. And again, the proper date in this case is June 30 of 2020, so that we know we're going forward in time 1 month at a time. Now, don't forget to choose the correct receivables account. I think it's rent receivable. I think Ella's a little behind. If you don't remember, you have to check your rent report, but let's just put it in rent receivable for now. We don't want to get sidetracked. Just click Save and Close. And now, when we open up the lease reports, we can see percent progress on lease is 4.17%. And we can also see the money amounts of the lease. Here's the total of the lease, and here's the total that has been billed and earned from that particular lease. And these numbers, progress invoice and percent progress, will increase. Progress invoice will increase $2,000 a month, and percent progress will increase by 4.17 a month until we get to 100% and $48,000. If you want to see how many months have gone by in the lease, just double click and go back to the estimate. And even if you're not creating an invoice yet for the next month, you can still click Create Invoice for selected items, then click OK, because this window will show you what has been done prior, or the prior quantity. So, we only have 1 prior month so far. Let's imagine we're going to make the July 31st invoice for the next month against this lease. We would click Create Invoice from the very same lease window. Then we would click down here again and click OK. Now prior is 1, but the current quantity in July is 1. 1 more month's worth of staying during the lease, which brings the total up to 8.33% of the lease finished. When we click OK, we say that 8.33% of the lease is finished as of the day we're billing. Now in this case, it's the end of the next month, July 31st. Now when we click Save and Close, and we look at the percent progress on the lease, we now see it's immediately updated. The total of the lease was $48,000, but the total that has been billed is $4,000 because that's the amount that was actually earned, and now we have 8.33% progress on the lease. One more time for August 31st. Double-click, click Create Invoice, make sure it's Selected Items. Now look, prior says 2 prior months, totaling 8.33%. This is one more month because it's one more invoice against this lease. Click OK, and now we're up to 12.5% complete, but that's at the end of August. So that at the end of the third of 24 months, we're 12.5% complete, and the prior amount is $4,000. After we save this invoice, the prior amount is going to go up to $6,000. Click Save and Close, and now again, we've invoiced $6,000 because that's what we've earned against the $48,000 lease, and this is the percent progress.
Chapter 30. Dealing with Advanced Lease Issues.
Automated invoices from the memorized transaction list cannot be applied to a lease estimate. So, here are your choices. You can either make the invoices yourself from the estimate window, like we just did, or you can automate the invoices and set up a custom report. So if you look at this report, percent progress on leases, the only reason why this information shows up is because the invoices that were made from the estimate lease window. Unfortunately, if you use the memorized transaction list, when it gets recorded, there is no possible way to get an automated memorized transaction to let itself be applied to an estimate so that you can track the percent of progress. The only thing you can do is set up a custom report. So if you have too many tenants and you really need to automate those invoices, and a lot of those are leases, don't worry about using this report. Just let the memorized transaction list make the invoices, and even though they're not connected to the estimates in such a way that this report would help you, you could still do this. Reports, customers and receivables, transaction list by customer. Now push A for all, and this is the only report that shows estimates with other transactions. Now, what we could do is scroll down, and we actually want to filter this. We want to filter this report just by the person who has the estimate, who I think is Ellen. So we want to filter out just Ellen, and we also want to remove payments because we want to see the relationship between the invoices and the estimates. So what you can do is click Customize Report, click Filter. Oh, you know what? And when you filter, first click anywhere in the filter box, type N from your keyboard, then when it says name, choose that particular customer, in this case Ellen. That's one filter. We also want to filter by transaction type. We want only estimates and invoices. We click here, and we push the letter T on your keyboard, and then you could see at the bottom of the pull-down list you can click transaction type. Now we don't want all, we want multiple, meaning more than one. So we just only want invoices and we want estimates to be on this report. So here are the filters. We want only this particular tenant, and we only want invoices and estimates. When we click OK, we have only Ellen, and we have only her estimate and the other invoices. Now, obviously in a real situation, all of these estimates above this, all of these invoices above this estimate would not be here, because usually you make the estimate, which is the lease, and then every invoice is going forward. So you only have to focus on this section. Let me see if I can do that. Yes. What would only really be here is just this section. This previous section up here was just for example in prior videos. But if you looked at this section, and this would be the only one here if there really were a lease, because the lease would start at the beginning, and you can compare the balance of the lease to all these invoices, and then you can gain some sense about how much financially and physically you've made progress during the lease. You could also export it to Excel. If you export to Excel, you could then do math between the cells to find the percent yourself if you needed to. And now we will learn all about flipping properties. This is video 1 in a series of 3 videos regarding flipping properties, and in this video we will learn about buying a property. What does flipping property mean? It means you buy a property, then you renovate the property, and then you sell it for a profit. For the first time in this course, you will now have assets in your chart of accounts. And you may well ask, what is an asset? Well, it's something you pay for that has value well after you pay for it. So let's clarify. At the moment you pay for something, if you already used the value at the moment you pay for it, that's how you know you have an expense. And expenses are reoccurring things like delivery, repair, cleaning, and things you always have to pay for to maintain and run your business. However, if at the moment you were paying for something, you were paying for an asset, the value was still there after you pay. So things like a car or equipment or even a building. If you pay for these things at the moment you pay, it still has value that you can use into the future. It's still an asset even if you can't touch it. And that's a very important point. If the asset is intangible or you're paying for some idea, but this idea has value into the future, then it is still considered an asset and it is put into QuickBooks that way. Now, when you buy property, it is a fixed asset type of account in QuickBooks. You usually buy it with a mortgage. You give the down payment to the bank, and the bank gives the mortgage money to the previous owner. So, how do we set up to buy property? Well, first, we have to put the mortgage company on the vendor list. In this case, it's Mighty Mike's Mortgages. From the main menu, click Vendors, Vendor Center. Then in the top left, just like we learned, click Vendor, New Vendor, and just type in Mighty Mike's Mortgages. And then just click OK, and now we have a payee on the list that we can pay the deposit to and make the mortgage payments to. And now we put the fixed asset account in the chart of accounts that represents the property that we're buying, or at least represents the cost of the property that we're buying, 110 Livingston Street, and we put it in as a fixed asset. From the main menu, click List, Chart of Accounts, then in the bottom left, click Account, New. Now, this is a fixed asset major purchase. We click Continue, and we're going to put in Building 110 Livingston Street. That's the name of this fixed asset. Save and close, and now we have the fixed asset on the list ready to use. And now we have to add the mortgage account in the chart of accounts as a long-term liability, and you can just name it Mortgage to Mike. So, account, new, and it's a long-term liability. Click Continue and type in Mortgage to Mike. And that should be enough for us to remember what it is. So, now that we're all set up, we have to ask what happens on the day that we buy the property. Well, cash in bank decreases by the amount of the down payment. we become responsible for a long-term liability, which is the mortgage, and we own the asset that we just paid for. All you have to do to handle all of this is to make one big journal entry. Or you could break it up into two transactions, which is the normal way to do it. For example, let's imagine on October 1, we paid the mortgage company, Mike's Mortgage, check number 2001 for $30,000 for a down payment on the house at 110 Livingston Street. So how do we do that? Well, we already know how to write a check. We can click check from the icon bar, and it's check number 2001, and the people whom we're paying, or the mortgage company, is Mighty Mike's Mortgage, and the date we're paying, I believe the date was October 1, so it just happens to be here in the calendar, and the amount we're paying is $30,000. Now, this was already chosen because I did a warm-up video, but you should know that the account that you're paying for is the new asset that you made. It's the building at 110 Livingston Street. So if you click here and then you click building at 110 Livingston Street, it means you're paying $30,000 for that building. We click save and close, and then we check the trial balance, and you can see cash is greatly diminished. But you can see building at 110 Livingston Street shows up for the first time in the trial balance as $30,000. Now let's imagine that the mortgage company, Mike, gave the previous owner of 110 Livingston Street the $70,000 mortgage that we are now responsible for as the new owners of the property. Well, how would you do that? As I mentioned before, you would make a journal entry. So, if you look at the building right now, you see it showed up normally when we wrote a normal check as the debit side. This implies that the building or the asset would normally be on the debit side. And that's what we're going to put when we record the journal entry. And that will help you remember the amount of the building that you paid for through the mortgage gets put on the debit side, and therefore the balance of the mortgage in the liability account goes on the credit side. From the main menu, we click Company, Make Journal Entry, Make General Journal Entry. And the journal entry window opens up. Just click OK for this. Now, the date that we are assuming responsibility for both the mortgage and the property is really October 2nd. Now, as mentioned, this 110 Livingston Street building showed up on the debit side when we paid for it. By giving the owner the mortgage, we are paying more by $70,000. So it goes on the debit side. That's how you will remember it. If you pay more for it, the debit part goes up. And of course, everybody knows in a journal entry, whatever money amount goes on the debit side goes on the credit side. And you may well ask, what account should we credit for the $70,000? And the answer is the long-term liability mortgage to Mike. So at the moment we assume responsibility of the building, we make a debit for $70,000 to show that we have paid more for this asset, but we acknowledge we owe this liability, we make a credit $70,000. And if you want to learn more about debits and credits and why we put this the way that we do, you can watch the supplemental videos about debits and credits. In the meantime, click Save and Close, and don't worry about this, just click OK. And now notice the total you paid for the building was $100,000, and you only have a $70,000 mortgage, and your cash has greatly decreased. And these are the results that you would expect after paying your cash plus assuming a mortgage to buy a building worth $100,000. And now we will continue our studies of flipping properties by learning about how to record renovations or upgrades. How do you record property renovation, also called upgrades, at the moment that you pay for them? Well, all the money you pay for upgrades, regardless of the specifics, should be recorded into one fixed asset type of account. You should not use the sub-accounts to track the separate type of expense upgrades. The total amount in this account reflects the total value that you have added to the home. This may not directly be related to the amount of market value or selling value, but you're still adding value for the amount that you pay. Let's add a fixed asset account. Let's call it Livingston Street Upgrades or Renovations. We will use this account for any type of upgrade that we pay for, and we'll put it in the chart of accounts as a fixed asset. From the main menu, click List Chart of Accounts. Then in the bottom left, click Account New. This is a fixed asset. We click Continue, and we type in the name Renovations 110 Livingston Street. Now all we have to do is click Save and Close, and now we have the account on our list to be able to use and record anything we pay for upgrades. And now let's continue with our example. Let's imagine on October 10, we paid a new vendor, Handyman Nedgree, to add a room to the house, and we paid him $5,000. So, from the main menu or from the icon bar, we open the check window, and we see that that was October 10, 2020, so we fast forward to 10/10/2020, and we don't have Handyman Nedgree on the list, so we click Add New, and he's a vendor, and we type in Handyman. See if anybody remembers the old Mr. Rogers show or Captain Kangaroo, but we paid this person or this organization $5,000, and what did we pay this person for? We paid them for upgrades and renovations for the 110 Livingston Street. I think it was this one, Renovations 110 Livingston Street. There we go, and we click Save and Close, and if we open the trial balance, you can see for the first time Renovations 110 Livingston Street shows up for $5,000. Now let's imagine on October 22 we had to pay Con Edison for a special private rewiring job of the house's electrical system, and we paid $4,000. Well, that still counts as renovations and upgrades, so that should be very simple. We open the check window, and we switch to October 22nd, the day we wrote the check. We paid Con Edison, the vendor, and we paid $4,000. And you could describe the reason in any way you want, but the bottom line is, this is renovations to 110 Livingston Street. So now when we click Save and Close, we can open up the trial balance, and we can see that the renovations for 110 Livingston Street is up to $9,000. And finally, on October 28, we paid Rex Repair Shop to redo the roof for $6,000. It doesn't matter what he does, it still counts as renovations. So we would do it the same way. We open the check window, and we put October 28, and we choose Rex Repair, the vendor, and the amount we're paying, I believe, was $6,000, yes. Now, you might want to put roofing or something in the memo, but that would be the most detail you could put, because this time we don't want repair expense. This time we want Renovations 110 Livingston Street. Now when we click Save and Close, we can open the trial balance, and we can see that the building renovations are already up to, for 110 Livingston Street, $15,000. And don't worry that our cash is negative. It's going to become positive very, very soon.
Chapter 34. selling property with gain or loss.
What happens when you sell the property? Well, you no longer have the fixed asset in your records called Livingston Street. You no longer have the fixed asset in your records called Renovations or Upgrades. You do have more cash in the bank, and you have a gain or a loss on the sale. Those are the four things that are affected in your records when you sell the property. When you make the journal entry, simply list each of these things separately and everything will work out perfectly. It will be the easiest transaction you ever recorded. Before we do that, we have to add an account, or at least two accounts, into your chart of accounts. You have to add an account called gain on the sale of property, and that has to be an other income type of account. But just in case you might sell it as a loss, you should also add loss on the sale of property, and we will make that an other income, other expense type of account. So, very simple. In the chart of accounts, list chart of accounts, again in the bottom left, account, new. This one is other income, not income, other income, because it will go in a different place and it belongs in a different place in your profit and loss report. Click continue and we'll type in the words gain on sale of property. Then we'll click Save Anew and we'll choose Other Expense type of account and we'll put loss on sale of property. And we'll put Save and Close. Now we have the two accounts we need just in case we have either a gain or a loss. For example, let's imagine on October 31 we sold the house for $150,000. Well, what do? If you look at the trial balance, we can see the amount we have here as debit for the building is $100,000. So in the journal entry, we have to make a credit to wipe that out, a credit for $100,000 to this account. Same thing with the renovations. It has a debit balance, but if we no longer have the building, we should not have this account in our chart of accounts. So because it's on the debit side, we have to make a credit to wipe it out. Now notice cash in bank now has a negative balance. And again, you can study about debits and credits in the supplemental videos, but if cash is credit, it means it's negative. That means when we get the $150,000, it will go on the debit side, and of course it will decrease this. It will not be a full $150,000 because we already have a little bit of a negative balance, and the difference will be either a gain or a loss. So from the main menu, click Company, Make Journal Entry. Click OK, and of course we have to put the date October 31st of 2020. Now, again, this building has a debit balance, so we have to make a credit of $100,000 for the building, for that particular account, building on Livingston Street. Then when we click the next line, QuickBooks is trying to balance the entry for us. It doesn't know that we're not finished after two accounts. So let's wipe out what QuickBooks suggests. Go ahead and find the renovation account, Renovations 110 Livingston Street, and that was a debit balance of $15,000. So to wipe it out, because we sold the house, we have to make a credit. Push Tab. Now, the cash we got goes into cash in bank, but it's not $115,000. Remember, QuickBooks is just trying to balance the entry. Change it to the actual amount of cash that we got. Push Tab. Now, if we keep pushing Tab, QuickBooks again is trying to balance the entry, and it's showing us, it's showing us that the difference between all that we paid for the house and the amount we got paid for the house, that difference is $35,000. And because the amount we got paid was more than what we paid for the house plus what we renovated, we now have to choose this account, gain on sale of property. So, did we account for all 4 of these items in the journal entry? Yes, we did. Compare each of the things that were necessary to what we actually put. Now, when we click Save and Close and click OK, you can see the building is gone, it's down to 0. The renovations are gone, it's down to 0. Cash went from a $2,000 or $3,000 negative balance to a $147,000 positive balance because we received $150,000. And of course, at the bottom here, you see gain on the sale of property. Now, I need to show you what the normal profit and loss would look like with this gain. From the main menu, click Reports, Company and Financial, Profit and Loss Standard, and push A for all. Notice the profit and loss has a normal income section. See, here's an income section, income from late fees, rental income earned, and the total income. Then it has an expense section for all of the different expenses that we paid during the course, and then it has ordinary income. So we made normal rental income minus expenses this amount, $56,675. However, in an additional section for something that we don't normally do on a regular basis, we had another income that's listed here at the bottom, gain on sale of property, and now this net income is the real amount of net income that should be considered when filing for your taxes. Now, to get the whole picture, you should try a second example. Let's imagine that we instead sold the house for $95,000. Well, let's just delete what we entered. If we click the journal and scroll to the bottom, we get the most recently entered transactions. We can double-click this, then click Edit Transaction in order to bring it back in front of you. Then you can delete it. Click Delete and click OK. Now, we'll re-enter it fresh. Let's imagine that we sold the house. So again, building on Livingston Street, we have to make a credit for $100,000. The renovations account, same thing. It has a debit balance of $15,000, so we have to make a credit of that same amount to wipe it out. But now this time the cash in bank that we got was only $95,000. So when QuickBooks balances the entry, QuickBooks says we need a debit this time to balance the entry. We need a debit this time because the amount of cash on the debit side that we received is not as much as the total that we paid for the house and the renovations. So if the cash we got is not the same as, is not more than the total of what we paid for the house and the renovations, then that difference logically is a loss on the sale of property. And this is what it would look like if you got less than what you paid for the house plus what you paid to renovate. You would have this loss. When we click Save and Close and click OK, we can notice that the profit and loss now shows a loss on sale of property for $20,000, and it lowered our ordinary income.
Chapter 35, Making and Recording Mortgage Payments.
What does each monthly mortgage payment have? Well, each payment has a small amount for interest expense, which is the service fee that the bank keeps because they loaned you money for the mortgage. It has an amount that decreases the principal balance, and that amount is going to be different for each monthly payment. And of course, very often mortgage payments also include something called escrow, which is a mix of the mandatory real estate taxes and mandatory insurance that the bank requires that you keep during the life of the mortgage. Now, we already put this account in our chart of accounts, the principal. We already have a long-term liability in our chart of accounts that we put in an earlier video, and that reflects the current balance. What we have not yet put is interest expense and escrow in our chart of accounts, and we will put them both as an expense. From the main menu, click List, Chart of Accounts. In the bottom left, click Account, New. Now these will both be expenses. One will be interest expense, Save and New, and the other expense will be escrow. And you might want to also mention some more details about which one it is. Okay, save and close, and now we have the accounts on our list, and we're able to start making mortgage payments. How do you know how much of each payment goes to each of the parts that we talked about? Well, there's two ways. The bank will give you a payment schedule, so you will always know which payment has which amounts. Or you could use the QuickBooks Loan Manager, which will be discussed in the following videos. For example, let's imagine on November 1, we made payment number 1 for $500. Now, all of the payments will be $500. However, let's imagine that every single payment has a $100 escrow for the insurance and the taxes. But this particular payment, payment number 1, the interest will be $100, and $300 of this payment will be a balance reduction reducing the principal. So how do you record this in one payment? You do what we call a split check, and it's very, very easy. Before we make the payment, we look at the trial balance, and you can see that the mortgage to Mike is still $70,000, and we have $92,920 in the bank, and right now we don't have any interest expense or escrow on the trial balance, even though we put it in the chart of accounts. But these numbers will change accordingly when we enter this information for this first payment. So, we open the check window and we put the date November 1st of 2020. Now, the person whom we pay is Mike, the mortgage guy, Mighty Mike's Real Estate. Now, the amount that we're paying is $500, and we push tab. Now, QuickBooks tries to help us by remembering the most recent account associated with this vendor. It does not know what's happening. It's just trying to make a suggestion. We will not leave this as $500, and we will not leave this as the building. First, the escrow account, the escrow, which I believe is here, we already said 100 out of the 500, push tab. 100 out of the 500, out of this $500 total payment, $100 goes to the escrow. We also said expense, which is interest expense. In this particular payment, payment number 1, the interest is $100, and therefore the remaining $300 decreases what we owe, so we go to the long-term liability account here. So this is what's called a split check. The total we're paying is on top, and that's what's coming out of the bank account that you chose. 100 of that goes to this expense escrow, another 100 goes to this expense interest, and the remainder decreases the long-term liability. When we click Save and Close, we look at the trial balance and we see the mortgage to Mike is no longer $70,000. It is now $69,700. You now notice you have $500 less in the bank as a result, and for the very first time, interest expense showed up for $100, and the escrow showed up for $100. Now, we must do a second example to get the whole picture. Let's imagine December 1, we made payment number 2, again for $500. Again, the $100 in escrow will be the same for each payment. However, the bank schedule that they gave us for this mortgage tells us that in payment number 2, the interest amount is only $95, and the amount the principal is reduced in payment number 2 is $305. And this is exactly the way we split the check. We click check from up here, and again, it's December 1, and it's still Mighty Mike's Mortgages whom we're paying, and we're still paying $500. Now, we know that the escrow amount is still going to be $100, so we might as well put that first. But this time the amount of interest expense is only $95 because it's the second payment and the interest goes down each payment. And that means the mortgage reduction, the principal decrease of this long-term liability is now $305. So QuickBooks knows this has to add up to the total payment on top. And if you ask, why does the interest go down each month and why does the principal reduction go up each month? For that, you can simply watch the following videos and it will explain all about how mortgages work. For now, just click Save and Close and take a look. Now the balance of the mortgage is even more decreased, and the interest expense is even higher because we had 2 months worth of interest. And of course, the bank account decreased even more. And that's how we do it. If you look at the loan balance right now, mortgage to Mike, it's now down to $69,395, which means if we wanted to pay off the mortgage after the December 1 payment, this would be the amount we would have to pay.
Chapter 36, Writing Off Uncollectable Rent.
Sometimes tenants move out after becoming bankrupt or just in a condition where they simply can't pay. This means there's several months' rent owed that will never be collected. If you recorded the uncollectible invoices, then those invoices are adding to the balance of the rent receivable account. You could just delete them, but you shouldn't. You should keep a record of the months they stayed and what they owed. Sometimes the past invoices will have helpful information on them, and you can just make the tenant inactive so that you could reactivate the tenant if you ever need to see the details on anything that was written on one of their invoices. So what will happen when you write off an invoice? Well, rent receivable will go down because you're no longer owed that money because you wrote it off. And a normal accounting expense that accountants call bad debt expense will increase, and this is the expense that your company has when customers who owe you money don't pay. We will call this account uncollectible rent expense. From the main menu, we click List, Chart of Accounts, and in the bottom left, we click Account New. The type is expense, click Continue, and the name is Uncollectible Rent Expense. Now, click Save and Close, and now it's in the chart of accounts, ready for our example. So, here's our example. On December 31, 2020, Dave Deeney moves out, and you will never get money from him. His balance was $7,600 when it was formally declared that you will get nothing. We have to write off his balance and then make him inactive. Let's take a look at how to do it. How do we do it? Well, only the desktop accountant's edition of QuickBooks has the Write Off Invoices tool. So in our case, we have to accomplish the same thing by making a journal entry. Before we make the journal entry, let's take a look at the tenant balance detail to confirm that this guy, Dave Deeney, owes us $7,600. his balance should be 0 after we write it off. From the main menu, click Company, Make General Journal Entry, just like we learned. Now, the date in our little story is December 31st of 2020. And of course, we already agreed that rent receivable will decrease by $7,600. Then the question is, do we put the $7,600 on the debit side or the credit side? Well, if you look at the trial balance, you can see that rent receivable is normally on the debit side. Therefore, to decrease it, we have to put it on our money amount on the credit side. So if we when we're done with this, this will be $7,600 less. And bad debt expense, which is uncollectible rent expense, will show up on the trial balance for the first time as $7,600. So again, if rent receivables on the debit side, make it a credit. We come back here, rent receivable we put on the credit side to decrease $7,600, push tab. So what account should we debit? The new account that we put on the list, uncollectible rent expense. Now we click, one last most important thing. On the same line as rent receivable, you have to come here where it says name, and you have to choose Dave Deeney. I repeat, you do not have to mark it as billable because he's not going to pay, but you have to put rent receivable on the credit side, $7,600, and on the same row as rent receivable, you have to put that particular tenant. Then you put the debit as uncollectible rent, and we click Save and Close. Now look, rent receivable decreased by the $7,600, and uncollectible rent expense showed up for the first time as $7,600. And now when we look on the tenant balance detail, you can see that Dave Deeney's balance has decreased to 0. And of course, now that Dave's balance is 0, we can open the tenant's records, and we can right-click on Dave, and we can click Make Customer Inactive. Now when we go back to the report and click Refresh, well, he's still there. Let's see if he's still there. Okay. Candy Charles, Dave Deeney. So he'll still be there on the older reports, but if you open the tenant's records, you won't see him on the list anymore because he has been made inactive.
Chapter 37. Giving and recording credit to tenants for services rendered to the landlord.
What happened between you and the tenant? Well, you agreed with the tenant for a decrease on rent receivable in exchange for receiving some services from that tenant. In that case, the agreed upon monthly rent is still the same. The tenant simply gets a specific break for a specific amount for each service that the tenant performs. Please note, however, you should not assume that the tenant will always perform the service and then lower the agreed upon rent permanently. If you do that, then there would be no records of the real rent and the value of the service that they are getting a rent deduction for. Instead, the tenant's records should show both the rent you earned and the amount of each decrease for each service or each set of services that they rendered. If you do it that way, the right way, you are much less likely to have conflict with your tenant regarding the services they are giving for a decrease in rent. So how do we set up for this in your QuickBooks records? Well, you must have an expense in the chart of accounts to record the expenses incurred when receiving the tenant's service. For example, if the tenant cleans the house once a week for a $50 reduction in rent, the expense you incur is cleaning expense. And at the moment they clean, you acquire that expense. The rent credit they get has the same result as if you paid them directly for the cleaning. You must have an item on the items list for cleaning services rendered. So, we must set up the item for the cleaning services rendered from the tenant. Here we are in QuickBooks, and if we open the chart of accounts, you can see that we already have an account called cleaning expense. It's right here. Now we have to go to the items list. Items list. Now, what do we call this? After we put cleaning expense into the chart of accounts, we will put the item on the items list called reduction for cleaning services. So, on the bottom left of the items list, we click item, new, and of course it's a service, and the name is reduction for cleaning services. Okay? Now the account it's connected to is obviously the cleaning expense account. Now we click OK, and now we have a new service on the items list that we can put on a credit memo or an invoice in order to record receiving the cleaning service from the tenant. So, for example, let's imagine back on October 1 of 2020, we agreed with the tenant Candy she would clean the hallway and common areas of the Meadow Lane property 2 or 3 times a week. She will receive a $50 rent credit for each time that she cleans. Now, the right way to record this is to make a credit memo for each time that she cleans. So let's imagine on October 10, Candy did 1 session of the agreed upon cleaning. How would we record receiving the service on October 10? Well, very simple. We click Customers, Create Credit Memo. And all we do is put in the information. October 10, and I believe in our little story, it's October 10 of 2020. Now, what did Candy do for us? Well, we have to choose Candy, and the item of service that she performed was reduction for cleaning service, the item that we just made. And we put in the amount $50 and push tab. Now, when we save this document, which proves and clarifies that she performed that specific service on that specific date, after we save it, okay, we just don't worry about this, we can go to the tenant's rent report, which is right here, rent balances, and you can see in Candy's records that her balance just decreased by the $50 that we just recorded because she performed the service for us. Okay, now what about this? Let's imagine on October 21, Candy did another session of cleaning. If she did another session of cleaning, then on October 21, we have to make another credit memo. Same exact thing. October 21 was the other day that Candy cleaned, and the item is reduction for cleaning service, the item we just made, and the break we're giving her for that session is $50. When we save this one, you can see that we now have an additional decrease in Candy's balance for the credit memo we gave for the service she just performed. And that's what we would do every time she cleans. Now, let's make the October rent invoice, and at the moment we do that, we will apply the credits to that invoice. So, let's take a look at how to do that. You would make the invoice normally. You would click Invoice, and the date of the October invoice would be October 31 because we earned October's rent on October 31. We will choose Candy, and the item is monthly rent in this case, or rent due. Now, of course, Candy pays $1,000 a month in rent. That's what the actual rent is. But after we fill out the normal invoice for earning the monthly rent, we have to make sure the main tab is chosen so that we can click Apply Credits and click Yes so that we can apply the credits. And what credits are we applying? Well, this is credits specifically for Candy. This $50 credit will decrease this rent invoice, and this $50 credit for cleaning will also decrease this October rents invoice. And then we click Done, and you can see that Candy now only owes us $900 for the October rent instead of $1,000 because we applied $100 worth of the credits for the cleaning that she did. Click Save and Close, and you can see the balance now of Candy goes back down to zero because she has earned $100 of the rent and she already had $900 prepaid from before, but I think you get the idea. Now please note, it's better to see each individual instance where she cleaned and see what we actually charge her in rent rather than summarize them together so we don't see what's going on.
Chapter 38. Recording the gain you have from a tenant's abandoned security deposit.
Sometimes tenants leave and nobody claims or requests their security deposit back. This is simply an unexpected gain to you, the landlord. You should record it as an income type of account, but not a normal income type of account. You see, since it's not a gain that relates to your normal operations, it should be in an other income type of account. That type of account will appear on the bottom of the profit and loss after the income from normal operations. So let's go ahead and put it on the list. List, chart of accounts. Now we click Account, New, but remember, we don't want an income type of account. Click the pull down. We want Other Income. Other income, and this explains that this is income but not from normal ordinary operations. Click Continue and you type in gain from abandoned deposits. You might want to put it in capital, so I did that real quick off camera. Save and close, and now it's on the list. Way down below the income section is the other income section. Now, gains from abandoned deposits, in order to acknowledge this, you just make a journal entry to remove the deposit and acknowledge the gain. You credit gain on abandoned deposits and debit the security deposit payable. Put the tenant's name on the same line as the security deposit payable so QuickBooks knows which specific tenant's deposit you are gaining from. For example, let's imagine on November 1, J. Jonah Jameson, our tenant who has a security deposit with us, has passed away. Nobody in the family comes to claim the security deposit. You just make a journal entry to remove the deposit and acknowledge the gain. You credit gain on abandoned deposits and debit the security deposit payable account. You put the tenant's name on the same line as the security deposit payable so QuickBooks knows which specific tenant's security deposit you are gaining from and therefore should become zero in the security deposit report. So, very simple. Company make general journal entry. Now the date we're imagining is November 1 of 2020. And this is how we do it. You can hide the ribbon if you want to see a little more of the journal. The account that you credit is the new one we made, gain on abandoned deposits. Now, we don't know how much the deposit is unless we open the security deposit report. If we click here, you can see that J. Jonah Jameson still has $500 of security deposit with us, because in all of our previous videos, these other deposits went down to 0. And that's why on the trial balance, security deposits payable has only $500. It's only J. Jonah Jameson's security deposit. But after we record this journal entry, security deposit payable will become 0, and gain on abandoned deposits will show up for the first time in the trial balance as $500. So we credit the gain from abandoned security deposits, 500, and the balancing 500 debit goes to security deposits payable, and you must put J. Jonah Jameson on the same line. Now when we click Save and Close, we've achieved both goals. If you look at the security deposit report, you see that you recorded gaining from J. Jonah Jameson, and therefore you do not owe that security deposit anymore. And if you click Trial Balance, you see that the security deposits went down to 0. We gave everybody back their security deposit. And if you scroll down, we now have $500 gain on abandoned deposits. And if you click Reports, Company and Financial, Profit and Loss Standard, A for all, you can see that the gain from the security deposit is here at the bottom under normal net income. Because it is a gain, it is income, but it's not part of your normal operations.
And now, my friends, I'd like to thank all of the wonderful people who made it all the way to the end of this video. Keep in mind that even though it's not fancy, you have all the knowledge you need to be able to record any transaction and get out any result or report as a landlord or property manager. I wish you good luck managing your property records, and please stay in touch.